Okay, so hi everybody. First of all, I am Soumya, and today in this boot camp, I am going to teach you guys my entire strategy, my entire Forex strategy. Okay, this is going to be a little bit long and a lengthy video, but second. Yeah. So it's going to be a lengthy session. So make sure that you have water with you. If you want to eat something, have it. But I would just advise that all of you make sure to watch this on a laptop because it's not going to be the best thing to watch it on the phone. So, a little bit about myself before we begin. I've been trading from the last 4 years. I've been consistently profitable for the last 2 years. I've explored crypto, I've explored Indian market, I've explored options, I've explored pretty much everything commodities, crude oil, natural gas. I've pretty much attempted to trade on all the instruments. And with time, after taking a lot of losses, after breaching a lot of accounts, I now primarily trade in Forex and futures. So, as you all might know, if you've been seeing my content, then I trade futures mainly using order flow and footprint charts. So, that is one thing I do, which is the primary thing that I do. But I also trade Forex with the only strategy which I'm teaching you guys. So, what I like to do is, even though I like to trade futures better than Forex, I'm not going to lie, I still have some funded accounts with Forex firms because I think that Forex accounts, once you pass them, the drawdown is very good. You have like 10% drawdown, which means it is very hard for you to breach a Forex account as opposed to breaching a futures account. While I say that, obviously, there are different advantages of trading in futures as well. But yeah, I really treat my Forex accounts like a salary account that for sure I'll be getting a payout from it, which acts like my salary. But I can't guarantee that for futures because the lifespan of a Forex account is much more than the lifespan of a futures account because futures has about 3 to 4% drawdown and 6% drawdown. I'm not very sure. It really depends on which plan you buy, which firm you buy. But in Forex, you have a very decent drawdown. So, yeah, that's a little bit about myself. And I want to first say that I'm really happy to see the response. I did not think that so many people would be joining it. And you've taken a very nice step in your trading journey. And even if you don't have any idea, even if you get confused, try to just stay the entire meeting. Try to just understand what I'm saying. With each section, I will also be asking you guys to unmute yourself and ask me doubts, so feel free to do that. And the chat box is open always. You can always ask your questions on the chat box as well. With that being said, after the recording, after the meeting ends, I will also one second. Can somebody please answer the person on the group? They're asking for the passcode. Just tell them to join it however they can. I've sent the link. Okay. So with that being said, I also want to say that learning is one thing, but execution is a different ball game. So you really need to work hard. You really need to be attentive in this entire boot camp. And I've kept it for 4 hours so that I'm able to give you all the information that I've gathered in the last 4 years. Of course, it's not possible for me to do that, but I will try my best to do that. I will give you my entire strategy. This is the only strategy I use on my Funding Pips account. All the payouts I take, all the accounts I pass is only using this strategy. Also, once the meeting ends, I am also recording this meeting. I will post it on my YouTube and I'll share the link with you guys so that you can have access to this recording always. And also, you guys will also be participating in a giveaway towards the end of this meeting. So let's see who gets the giveaway. And wherever I have certain things where I don't want to give it out on YouTube because you guys have exclusively joined this, I will pause the recording there and the rest of the strategy I will post on YouTube so you guys can also go back to it and revise it. I would say that the first time you are learning this strategy, it's going to be a little bit tough for you to understand. It might be a little bit, confusing. But just remember, whenever you start something new, it always feels this way. And then after a while, you just think that, well, maybe it wasn't that tough. It really isn't. Okay. It's just about practice and experience. The more you check the charts every single day, the better your strategy will get. You need to show up to the charts every single day. That's a little rule I want to tell you guys, because see, in a year, in a week, we already have 2 days of holidays because of weekend, right? And so, which means we have 1, 2, 3, 4, 5, 6, 7, 8. We have 8 days where the market is closed, right? And we have 12 months, which is what 12 eights are. Do the math. I don't know. And then, other than that, we do have bank holidays. We have government holidays, like we have 4th of July and stuff like that, wherein banks don't function. And then the entire of December, actually from November, from Thanksgiving to Christmas, New Year's, Hanukkah, there are so many different occasions and festivals due to which the markets are anyway closed. So the point is, if I add all of them, you have about 100 days where the market is shut in the year. So when you already have 100 days where the market is not open for you, it is your responsibility to show up to the charts the rest of the days. You need to come to the charts the rest of the days and you need to show up, because even if you miss one single day, you are missing on potential trading opportunity. I can guarantee you guys that you will get about two-ish setups, 2 or 3-ish setups in a week. But if you miss one day, nobody can help you, right? Because see, let's say I'm saying you get 2 setups in a week. You'll have to come to the chart Monday. Maybe you get a setup, maybe you don't. Tuesday, maybe you get, you don't know. So once the week ends, that's when you will understand if you even, so that's when you will be able to understand that on what days you got the setup. It's not possible for us to decide from before when you will be getting the setup, right? So due to that, I think you should show up to the charts every single day. Just keep it a point that from here onwards, no matter how much knowledge you have, whether you are just starting out, or you are profitable, or you are funded, or you breached way too many accounts, whatever the reason is, or you have no idea about anything. I know that there are a couple of people who are extremely new to this. Even if you have no idea, make it a point that every single day you will open trading view and every single day you will look at the charts. It is advisable for you to look at the charts during the trading window. But even if you're not able to do that, always once you're done, once you're free in the day, after your day, go to the charts and see what had happened today in the charts. Okay? You need to do this, and that's how it's going to help you. I can teach you my strategy. I can tell you exactly what I do. Despite that, there are chances that you will make losses. And that is purely because of experience. And experience is one thing which only the market can teach you. I mean, that is something which it is a lonely journey, right? Trading is a lonely journey. And there are certain things which only you can do for yourself. So make a promise to yourself that 2026, 6 months are already over. In the next 6 months, it is going to end, right? And make it a point that towards the end of this year, keep a realistic goal for yourself that you will become a profitable trader. And trust me, it's not that tough. If you are going to have discipline, dedication, and if you have guidance, which I am providing you in this video, that's all the information you need to actually pass your accounts. So just have hope and be disciplined, be consistent, show up to the charts every single day. Secondly, the win rate of the strategy is about 80%, 75 to 80%. Now, when I say 75 to 80%, I also say that you need to understand that trading is a game of probability. So obviously there are going to be days wherein the strategy will give you losses, and that is okay. Like any other strategies, you are going to take losses. You just need to see that the majority of the time you are taking wins, and there is a very small minority where you take losses. Okay. As long as you're following your trading plan, you should be good to go. Okay. And one more thing. This is the biggest advice I'll give you before I even getting started. Guys, please, please, please keep a separate funded account just for this strategy. Preferably the one you guys bought with my code, which is why you guys are here. Please only trade this strategy on that account or any other account. It's up to you. If you will mix my strategy and then someone else's strategy and your own strategy, then you will never really know what the true win rate is, and you will start thinking that the strategy does not work and you will give up on it very quickly. So I 100% suggest keep a separate account for this strategy, and that's when you will understand what the true win rate is. Let me just pause the recording for a second to post that on. So that is a little bit about me, and I'm so proud and so happy that you guys have joined this. If you follow what I say, I can guarantee you will pass your funded accounts. After hearing your story, I think 3 years into trading, I have years to learn, burn, and eventually earn. Thanks for sharing. You're welcome. Okay, now let us get started with the technical stuff. Okay. Can you see my screen?
Yes, Soumya.
Okay, cool. Thank you. All right, so let us begin with our strategy first, and I will also share the recording on YouTube, so make sure to rewatch it when you can. Firstly, we are going to create our watch list. Now, what is watch list? Watch list is the pairs which we are going to be focusing on for my strategy. These are the pairs which I have back tested and which I trade. With that being said, do I mean that it's not going to work on other pairs? Of course not. It's technical analysis. It will work on, guys, please don't draw stuff on the screen. Thank you. So obviously it is going to work. It is going to work on all of the, one sec. Okay. So it is going to work on all the pairs, but these are the pairs which I have backtested and I can give you some guarantee about these pairs. So the first one would be XAU which is gold. The important thing is when you are adding this to your watch list, when you go and search XAU you'll have a lot of different charts. You have Oanda, you have TVC, you have Forex.com. The broker chart which we need for gold is going to be Saxo. So make sure to always use this broker chart for gold. The reason is very simple. We are trading with MetaTrader 5, which is the MT5 app where you take all the trades, and you need the charts on TradingView to be as close as possible to your MT5 charts. So this is Saxo and you need to use this for commodities gold. Then I have Euro USD. So what is Euro USD? Euro USD. It's basically Euro with respect to USD. When you are adding this to your watch list, again, you have a lot of brokers. Make sure to add it with forex.com. For all the currency pairs, we need forex.com. For gold, you need Saxo. And then I write this. Then I have USD Canadian dollar. This is the best pair. This is my favorite pair ever. Trust me. So UCAD, you can have USD CAD again, forex.com. And then you have Euro Canadian dollar, decent pair. I mean, whatever. Forex.com for this again. And then British pound Canadian dollar. You have to for this also add forex.com. And then my second favorite pair, which is the NAS 100. This is the US index, the way we have Nifty 50, these guys have NAS 100, which is US 100, like top 100 companies and stuff. So for this also I use forex.com. Make sure that you don't go wrong with the brokers. For gold, it's Saxo. For these pairs, it is forex.com. For NAS also, it is forex.com. Okay?
Soumya, I have a question.
Sure.
I tried this watch list, Soumya, from your earlier stream videos.
Hmm.
One problem I found, I mean, it's just me or I don't know. Volume profile isn't working on this, Soumya. Can you suggest?
So volume profile works only on futures contracts. So you will
I
never be able to use volume profile on any CFD thing. If I try to use it on NAS 100, see, it does not work. But when I use it in NQ, that's when this will work.
Is it just the trading view or ATAS or those will have?
In Atis, you can only, who's asking the question, by the way?
Murthy, this is
Okay.
Murthy.
Okay. So in Atis, you can only trade futures.
So it will have, yeah.
Yeah.
Thank you.
Welcome.
Hi, Soumya. Quick question.
Hi, yes.
Um, so you said Meta Trader 4, right?
Yeah,
I was in the
MT5.
DFA. They didn't let me open that, so I opened in Match Trader. Is that okay?
Okay, that's okay. It does not matter much. It's the same thing. It's just user interface. Do you live in the UAE?
US.
Okay. Okay, so you don't have MT5 in the US?
There is, but they didn't. I mean, this funding tips didn't let me open it with MT5.
What's the reason?
They said it's not available in your country.
Okay, yeah. Okay, so yeah, you are right. It probably isn't available. So you would have to be using C Trader or Match Trader. They're also good. See, at the end of the day, we just need the liquidity provider of funding pips on Match Trader and MT5 is going to be the same. So
Okay.
this broker is going to be the same for both.
Mhm. Okay.
So don't worry about that.
Thank you.
Okay. So these are the pairs we are going to be focusing on when we take the trade. The most important thing before starting the day, before taking a trade on anything, is going to be direction. Okay. So we want the direction to be correct whenever we are taking a trade. And I'm going to teach you guys a method how you can identify directions. Now, the first thing when it comes to direction is we are going to first choose time frames. We are intraday traders, we are day traders, so we don't really care much about the higher time frames. But we need to start our analysis from the higher time frame so that we are in alignment with the higher time frame. That makes our trade work better. So the time frames which I have are as follows. I use the daily time frame, I use the 4-hour time frame, I use the 1-hour time frame, and then 15 and 5 minute are my execution time frames. Okay, execution time frames means entry time frames. So 15 and 5 are used for entry purposes. Daily 4-hour and 1-hour I use for directional bias. Now there are two types of breaks which we see for directions. There are two types of breaks. So the first one is a minor break. The second one is a major break. Now these are the methods how we are going to find directions. So minor break can be used for the daily chart and the 4-hour chart. Minor breaks can only be used for the daily chart and the 4-hour chart. For any other time frame other than the daily and 4-hour, we need to see a major break for a bias. What time frames do we require major break for? For the entry time frames, we need major breaks, and for the 1-hour time frame, which is a smaller time frame, right? For this also we need major breaks. Minor breaks will work for daily and 4-hour. Major breaks are required to identify direction and 15, 5 and 1 hour. But for minor breaks, for daily and 4-hour, minor breaks will do too. Let's quickly talk about what is major and what is minor breaks. So, okay. Let's see, we have two candles. Let's say this is a red candle and this is a green candle. What does that mean? That means, what does a red candle mean? A red candle means it opened over here, it went all the way down, it closed over here. And what does a green candle mean? It opened over here, went up, and closed over here. Simple. And let's say we have two candles like this. We have a green candle first, and then we have a red candle following it. Now, what is this? This is basically we opened over here, went up, closed over here. Then we opened over here, went down, closed over here. Anyone has any doubt in these patterns? This is just basic candlestick.
No, Soumya.
Okay. So this I have. Now, let's say I plot it with the path tool. Red means opened over here, closed over here. Green opened over here, closed over here. So if I just plot this and if I keep it in the side, what does that mean? Price came all the way down, took support over here and went up, right? So can I call this area support? Is everyone with me here? Can this be support?
Yes. Yes.
Okay.
Yes, Soumya.
Similarly, now I am going to the other variation. I just have path. Green candle means it opened here, closed above. Red candle opened here, closed below. Now when I keep it here, do we see how the price went up, took resistance from here and went back down? So can I call this a resistance?
Yes.
This area is a resistance. Basic stuff. Now you tell me something. If I have a ball with me, okay, and I live in an apartment, okay, I live in an apartment and I am on the fourth floor. Now, the floor I'm standing on is third floor's roof, right? My floor is somebody's roof who's living below me, and my roof is somebody's floor who's living above me. Does that make sense?
Correct.
Yeah.
Okay. So when I bounce my ball on this floor, it's gonna bounce and it's gonna come back to me. The floor, my floor is going to act like a support. If I throw my ball above on the roof, and the ball is going to touch the roof, come back down, the roof, my roof is going to act like a resistance. Basic stuff. Now, let's say I throw the ball and the ball breaks my roof and then goes into the above floor and then it is in the other floor now. Now, what happens? It's going to bounce on their floor and go up, right? So, what was earlier when the ball was in my floor, this used to act like a resistance. After it breaks it, that same roof is going to become floor and it's going to act like support. Basic stuff. So, whenever resistance is broken, it acts like support. Now, let's say I bounce the ball on my floor and my floor breaks and then it goes down. So now you know that for the ball, earlier what was floor is now going to be its roof. It's going to be resistance. So now it's going to act like resistance. So do you understand the concept that when a support gets broken, it acts like resistance? When a resistance gets broken, it acts like support. So we have support and support is broken. So now the same area is going to act like resistance. Okay. And similarly, we have a resistance like this. This is the resistance. If the resistance gets broken, it can now act like support. And keep in mind, I'm always saying it might do this, it might do that. I'm not saying that 100% it's going to do because nothing in the markets happen 100%. If I say that, I'm saying something wrong. Okay, this is, oh, 1 sec. Okay, so basic stuff. Now, let's just try to see that in a candlestick chart only. You will, whenever you have a two candle pattern, you can mark a support or resistance. So this is a two candle pattern. So I know that price went down from here it went up. So the closing price of the first candle will always act like a support. In both the cases, the first candle will act like something. What is this? This is the resistance. So green candle went up, came down. So the first candle closing price is going to act like resistance. The first, this acts like support, this acts like resistance, just what I had explained. Now, for the support to be broken, what do I need? For the support to be broken, I need a candle like this. What would this mean? This means this is a red candle. A red candle opened over here, came all the way down, closed here, which means a candle broke and closed below my support region. So this would mean that this would mean that the resistance, the support is now broken. And here, if I have this, let's say I have a green candle like this, and if this green candle closes above, this would mean that the resistance is now broken by a green candle. Do you guys understand so far?
Yes, Soumya.
Yes, Swami.
Okay, cool. So this is the basic thing. Just remember this. Now these are, I'm not including wicks right now because when you see direction on the minor breaks, only bodies matter. Wicks, you don't really have to care much about the wicks. Now these are the two patterns which we have. So this is called as a bearish break. A support is broken. So it's a bearish minor break. Here resistance is broken with a green candle. This is called as a bullish minor break. This is a bearish minor break. This is a bullish minor break. Okay. And whenever I have a pattern like this on the daily or the 4 hour, I can tell direction. If the daily time frame has a break like this, I know that the last was a bearish break, so the direction is bearish. When I see the last break on daily or 4 hour to be like this, I can be like, okay, the direction is bullish. Now let's quickly just see that on the charts as well. We have something like this. So what would you do? You see this? Okay. Anyway, so let me actually remove this so it's not confusing. So we have something like this. What is this? A green. Okay, guys, by the way, when you look at my charts, white candles are green candles, blue candles are red candles. Okay. So if you have any doubts, again, just write it down somewhere. White are green candles, blue are red candles. So now what did I say? First candle is green, second candle is red. We just learned how to draw it. First candle is green, which means the price started here. This is where it opened, here it closed. Red start opened here, closed here. So which means it is a resistance. I just taught you guys this is the same pattern which we were seeing above. So the closing price of the first candle is going to now act like what? Like a resistance. Now we see a green candle which has closed above this. Isn't this the pattern which we saw? This is called as resistance broken, right? So we saw that this is a minor break towards the upside. So the direction on the daily time frame on Nasdaq is bullish. Understood?
Yes.
Cool.
Yes.
Let's see more examples so you will understand it better. Now let's go on the 4-hour time frame and let's see what the direction is on the 4-hour time frame. So let's see if this candle broke anything. I'm going to always see towards the left. If I see this, I'm going to see here there was a pattern. Now, which was not broken before. What is this pattern? Red opened here, closed here, green opened here, closed here. This is a support area basically, right? And now when I take this and when I mark it like this, then I know that this candle closed below this, which means now my support has been broken. This is called a bearish break. So my direction on the 4-hour time frame is
Hello,
bearish.
Soumya?
Yes?
Yeah. Actually, when market is running, we do not consider the last candle, right, as it's already running.
Yeah. I'm coming to that. Okay. So basically, obviously, right now it's in the replay tool, so I already know what's happening. I know that this candle has closed, but when the market is open, this is not closed yet. So we will always judge a candle after it closes. So this is not a candle which we are going to include. We will always start with candles before, since it is not closed yet. We will always judge a candle only after it closes. So I'll just teach you like that so you don't make this mistake tomorrow when the market is open. So, okay, we come to the chart. We ignore the first candle because the candle has not been closed yet. So, we go to the candle before it. So, don't just look at the chart and then be like, okay, we have a break here. So, direction is bullish. You cannot just go randomly mark any break. We have to always start it with the recent price action. Okay. So we are here. Did this, okay, this we will ignore because the candle is open right now. Did this break anything? It has not broken anything. Has this broken anything? It has not broken anything. Has this broken anything? Now finally I found it. What did this break? This broke this level here. Now this is a red candle, opened here, closed here, opened here, green, closed here. So this is a support region. And then now I will mark this and be like, okay, this red candle closed below this. So direction on the 4-hour time frame is bearish. The moment you find a break, now you don't have to go any further behind because you got your break. Let's see more example. Let's go to gold. Again, this is minor breaks, not major breaks. You can only use it for daily and the 4-hour time frame. Now we are in the daily chart of gold. Let's find the direction. I will ignore this candle because the market has not closed yet and the candle has not closed yet. So we'll go to the candle before it. Did this candle break anything? This is a red candle. Did this close below any support? No, it hasn't. Now don't say that it closed below the support because this is the closing price of the first candle. This candle had to close below it for us to consider. You can't consider wick. We need closing. That's when it closes, that's when we can say it got broken, right? This didn't do anything. We go behind it. This also did not break anything. Then we go behind it. This white candle. This also didn't break anything. Now we go to this green candle and we see if this broke some resistance since it's a green candle. And we found it. This is a green candle, which means it went up and red candle came down. So the closing price of this acts like a resistance. So we found our direction on the daily time frame for gold. The direction is bullish. Now let's go to 4-hour time frame and let's try to find the direction. Same thing. This did not give us any, this has not closed yet. So did this break anything? No. Did this break anything? No. Did this break anything? No. Did this break anything? Yes, I do. Okay, no, it hasn't. Did this break anything? No. Or maybe yes. Okay, yeah, this did break something. So did this break anything? So you will have to see it carefully, guys. So I have something like this. I have a red candle opened here, closed here, opened here, closed here. So this is the first candle's closing price. And now I know this red candle closed below this. So I know that the direction is bearish. Why am I counting this? Because see, no candle closed below it before. These are only wicks. If a candle closed below this, now I can't be like a future candle closed below this. Now the break has happened. Until a break has happened, the zones are fresh. Okay. So here it is bearish. So now I know the 4-hour time frame is bearish. So what did we see? We saw that the daily time frame is bullish and we saw that the 4-hour time frame is bearish. Let's go to Euro USD. Let's go to the daily time frame. First
A
candle.
doubt.
Yes.
A daily time frame is bullish, you said, right?
Yeah.
I mean the candle closed below the support also, right? I mean the
Which one?
yes, that candle. Yeah.
I just told you, na, this is the this is current price action, right? When you are looking at the charts, this
Your
has
voice
not
stuck
been
in.
closes.
Hello.
Hello? Hello?
Hello.
Hello?
Yeah, now it's audible.
Okay. 1 second. Okay. Yeah. You were saying something?
I mean the red candle closed below the support, right?
So
Previously found.
when you are looking at the charts, then would this candle be closed?
I
It
mean the
would.
candle is closed below that support, right? Body.
Are you're not
Yes.
understanding. I'm saying when you are looking at the daily chart, when you are coming to the charts, this would be open and moving, right?
Yeah, yeah.
So you will not consider it.
Okay. You are saying that that day it may be we cannot consider. Okay.
My point is, when you are looking at the chart, it's looking like this, but it's not closed yet. Towards the end of the day, what if it becomes like this?
Yeah, yeah. Yeah.
So you will only judge a candle after it's closed. Right now, I'm looking at the replay tool, because of which the
Okay.
candle is closed. But it will not be closed, right? When you are looking in the real current market.
Yeah, yes.
Okay. Is everybody clear with that?
Yes, Soumya.
Okay. So obviously we are going to ignore the first candle because the market is not closed yet. Then yeah. So we go back to behind this. We go behind and we will see if this did something. This also did not break anything. It did not break below this. It just wicked it. It didn't close below it. And then we go to the candle before it. This didn't do anything. This didn't do anything. This is where we got a break. This one broke above this. So the direction is bullish on the daily time frame. Okay. So now we go to Euro USD. Let's see the directions on Euro USD. This is the latest candle. You see, this white candle is the latest candle, so I'm going to ignore it. Let's see if this red candle broke anything. Very clearly, it broke this support. This support it broke. So my direction on the daily time frame is bearish. Moving on to the 4-hour time frame, I'm ignoring the latest candle. And did this do anything? Nothing. Did this do anything? Nothing. Did this do anything? Yes, it did. Here I have a red candle and a green candle, which means I have a support like this, and this candle has broken below the support candle. So the direction right now on Euro USD 4-hour time frame is bearish. Then let me go quickly to UCAD. This is just for practice purposes, so you're clear with the topic, then we'll move on. So this is the daily time frame on USD Canadian dollar. This is the latest candle, I ignore it. Then I go behind, did this do something? No, it did not do anything. Did this do something? Look towards the left and see if this closed above anything. I'm seeing here, okay, there's a green candle and there's a red candle, which means this area is a resistance area. So I mark the closing price of this. You can see earlier no candle closed above it, which is why it's considered to be a fresh. It has only been wicked. This candle closed above this. Now that we got our break, we don't have to go and see what happened before. We have to do this process. We have to keep going back from the current price action until we find the break. So direction is bullish on the daily time frame on UCAD. Now we go to 4-hour time frame, ignoring the latest candle because the price is not closed yet. Did this do anything? Nothing. Did this do anything? Nothing. Did this do anything? Yes, it did. Look at this. It basically closed above this. This is basically the resistance because green candle and red candle, it closed above this. The direction is bullish. Let's go to Euro Canadian dollar. It is, let's go to the daily time frame. What is daily doing? This we will ignore. Did this do anything? Didn't do anything. Did this do anything? Didn't do anything. Did this do nothing? Nothing. Now let's see. Finally, we found something. This broke this area. What is this area? This is basically a resistance region because green candle went up, red candle came down, which means that is a resistance region and this price closed above the closing price of this. So the direction is bullish on Euro Canadian dollar. Moving on to the 4-hour time frame, we will ignore this. We will go here and this is, did this do anything? Did not do anything. Did this do anything? Yes, it closed below this. So I'm going to go here and I'm going to mark this. This candle broke below this support. So the direction is bearish on the 4-hour time frame. Last two, GBP Canadian dollar, we have the daily time frame. The daily time frame, we ignore this. Then we go here. Did this do something? Yes, it did. It closed below this. So the direction is bearish. Moving on to the 4-hour time frame. Did this, we will ignore this. Did this do anything? Nothing. Did this do anything? Yes, it did. We have this red candle and a green candle, which means this is a support area and this closed below this. So the direction is bearish, as we already did. Clear with minor breaks? Practice it more. Check it with me on the groups. It will be clear. Okay, so this is what is known as minor break. This is the way we identify directional bias on the daily and the 4-hour time frame. So these are minor breaks. So minor breaks basically are just the moment you see breaks like this, you would just identify the direction. This RBS, SBR breaks are the direction. That's the way to find the direction on the daily and the 4-hour time frame. Now let's see the interesting part, which is called as minor breaks. How to identify minor breaks? Because this is the method which we will use to do directional bias on the 1-hour time frame and to take entry on the 15-minute time frame and the 5-minute time frame. This is the way we have to do. So until now we
I
were
have
just,
a question.
yes.
So in daily, if it is bullish, and in 4-hour, if it is bearish, does that make any difference?
I will come to that.
Huh?
I will come to that after doing the time frames, after teaching you how to identify time frame for the 1-hour time frame, then I'll tell you how to do.
Got it. Thank you.
Okay, so now let's talk about major breaks. Until now, we are seeing minor breaks. We were just looking at whatever area has been broken, that direction is our thing, right? So now we are going to see what are major breaks. Now, major breaks are a little bit different. So you have something like this. Now, this kind of pattern is required for me to identify that the direction is bearish. And we need this sort of, hello.
Yeah, you have written minor breaks there on the text. Like I think it's major breaks, right?
Sorry, major breaks. Okay, so you need major breaks for 1 hour, 15 and 5 minutes. You need minor breaks for daily and 4 hour. So major breaks look something like this. Until now, what we were doing was we would just see an area. We would just see towards which side that area has been broken. And those would be our minor breaks. And we would just say that that is my directional bias, right? That's what we've been doing so far. But now we need major breaks, which means we need to see a major change in character, a major break. That's when we can identify direction on the 1 hour. So directional analysis is going to be done on the daily time frame, the 4-hour time frame, and the 1-hour time frame. 15 or 5 minute we will use just for entry purposes. Okay. Now let's see. So here what happened? We had a high like this, and the next high went above this high, then went down. We have this low. The next low went below this low and then broke to the upside. So it's called bullish. Now, I will tell you guys, this is probably one thing which you will find a little difficult in this session to understand because major breaks take some time, takes a lot of time for you to practice, okay? For you to actually get a hang of it, this takes time. So trust me when I say that this is the only part where you might think that it is difficult, but just hang on, practice it every day. Then check your directions with me. I'll try to send my directions on the group so you're able to understand it. So just give it some time. So basically, what the idea here is price went up, created a swing, and price went down. A lot of people might have shorted here, and a lot of people took short trades here. So they might have placed their stop loss above this. So this guy who went up, he has taken away all of their stop losses and then gone down. So we basically are looking for kind of a stop hunt kind of structure. So people who kept stop losses here, we went and liquidated them, we absorbed all of them, and then we are going down. So this is where I would basically take a short trade. Just a little bit about how it is. So same thing here also. Yes?
Soumya, just have a question. On the
Hmm.
last leg also, it should close below the structure in the
No,
first. Okay.
I will come to the charts. That I'll show you in candles. You will be able to understand better.
Thank you.
Welcome. Okay, so I will come to that. So same thing here also. Price went down. People were buying over here. Okay. Now some person came in the market, went below this. So people think that we are going down. And from here it started going up, right? Which means this is bullish. Okay. So this is how it looks on the charts. Now I will show you how it looks on the candles. Okay. Now, what would I do? Again, I'm telling you this takes a little bit of time, so just be patient. So here we have this. Look at this. I'm just giving you like a rough example. Just an example. Do you see something like this? Candle went above it and then broke below this. Does this look good? Like a QM? So this pattern is basically called as QM pattern. Now, I'll tell you how you easily check this, how you can easily identify it. You are going to ignore this. Did this break something? No. Did this break something? Yes. What did this break? This broke this. So can I get a QM inside this? Try to identify. QM pattern is the major break. So this broke this, sure. Until now, we were just looking for the break, and the moment we get the break, we would just be done with our analysis, right? When we were seeing minor breaks. Here we are going to see, did a QM cause this break? So let's see. So candle was going up, candles were going up, a red candle came down, a green candle went up, and here there's a lot of price action, but it did go below the above this swing, and then it went and broke below this area. So this shows me that I have a major break and the direction is bearish. For example purposes, I was showing you the 4-hour chart, but we don't have to do this on the 4-hour chart. Okay. So let's go on the 1-hour time frame and let's actually do our analysis. We'll see so many examples that it's clear for you. So just be patient and try to understand. I ignored this candle because it does not say anything right now. It hasn't closed yet. I go here, nothing happened. I go here, nothing happened. I go here, and now I see that it closed above this area. Okay, cool. It closed above this. Now, did this break cause a QM? Now we have to see if there is the QM or the major break pattern. Now, what do I see? I see red candles going down. I see green candle going up. I see red candle going up. And now we need the candles to close above this zone. Look at this. This candle closed above. So clearly, I got a major break. The direction is bullish on the 1-hour time frame. Okay. Now let me just show it to you on 15 minutes so you can basically understand it better. So, okay. What did this do? We will ignore this. What did this do? Nothing. What did this do? Nothing. What did this do? Nothing. What did this do? It broke below this area. Okay, did this cause a QM? Anything before it? We can just go behind it. We have green candles. We have red candle. We have green candles and a lot of different price action going up. And this area was broken over here. So yes, we have a QM. A better way to do this is just going and seeing the last QM which you had. You can just mark it. Before this, the last QM which we had was this. Green candles, red candle, green candle went up, red closed below this. So the direction is bearish. Okay. Moving on to GBP Canadian dollar on the 1 hour time frame. Now let's see. Recent candle, I ignore it. This did nothing, did this nothing, did this nothing, did this nothing, this. And this basically broke below this. Now, did this basically do any QM formation? I'm going to first see that. So I see that yes, it did. I had green candles above, red candle below, green candle above, and up below this red candle closed. And here I have my bearish QM. So my direction on the 1 hour time frame is bearish. Let's go to NAS. Okay, NAS we did. Let's go to UCAD. Okay. Latest candle I ignore. This did nothing. Did this nothing? Did this break anything? Nothing. Did this break anything? Nothing. Did this break anything? Yes, it did. The closing price of this candle, it broke this. Did this cause a QM? Let me see. Nothing over here. Okay, now you can't be marking this. If you mark this, green went up, red came down, green went up, the wicks are only here, green just went here and broke this. Is this a QM pattern, guys? Tell me, is this a QM
No,
pattern?
it did not sweep the liquid.
Exactly,
It's not.
exactly. Exactly. Now you're getting it. This is not QM. We need this swing to be higher than this. That's when we are going to see a major break. Okay. So this did not do anything. I'm not going to see this. Let's go behind. Green candle went up. Red candle came down. Green candle went up. And then this candle broke below this. Now this is a major break. So the direction is bearish. Okay. Moving on to UCAD. I don't know, I think I did this, but still let's do it again. Did this break anything? Nothing. Did this do something? No. Break? No. Break? No. This? Yes. I see a break. I see that this broke this. Now, did this also cause a QM? Yes. Why? Because I have this, I have red, I have green, and wicks. These wicks went above these wicks. That's the main thing. And broke it. So this is going to be
Hello, Son.
yes.
Yeah, while sweeping the swing once liquidity, like it can be done through whip or the body closing should be about the swing first swing.
It even if it's wicks, that's fine. It needs to go above wherever this price traded. The point of liquidity is whatever price action took place here, this swing needs to go above that and then close. So even if it's wick, this means that here whatever orders you have, this price has taken all these orders and then gone down.
Okay, and while for a bullish swing, like the liquidity should be swept by a red candle or any candle would be fine.
Sorry?
Yeah, for the bullish candle, for bullish QM, there would be a W type pattern, right? QM.
For identifying direction, any candle can sweep liquidity.
Oh, yeah.
For entry, that color thing will come.
Okay.
So we are done with the
Sorry, sorry to interrupt. So,
yes, yes.
for the entry, so the sweeping candle should be green if it is bullish clear. Sorry, yeah.
Can we not talk
Red.
about the entry right now because there are a lot of people
Okay,
who don't know the entry yet.
okay, no problem.
So we'll come to because they'll just get confused now because you guys too have done it in the
Yeah,
previous
yeah,
podcast.
sure.
Okay. We will do that though. Just keep a note of your questions and you can ask me when we're doing entry. So we did the first and the most important thing, which is the directions. How to identify directions when you're taking a trade. Whenever you are taking a trade, whenever you're entering into the trade, you need to check directions. And remember this rule now. we need to have two time frames plus entry time frame in alignment to take a trade. We need to have two time frames plus entry time frame to take the trade. Now, what is entry time frame? We take entry on either the 5-minute time frame or the 15-minute time frame. Okay, so we need either one of these should be there for entry, and other two time frames we need something in our alignment. Let's say that the daily time frame is bullish, the 4-hour time frame is bullish, the 1-hour time frame is bullish, and the 5-minute time frame is bullish. Can I take a buy trade?
Yeah.
Yes. Why? I need two time frames and the entry time frame. 5-minute is my entry time frame is bullish. And I need two other time frames to be bullish. In fact, I have three, which is even better. I can take trade. Great. Now let's see. If I have daily bearish, 4-hour bearish, 1-hour bearish, and I have 5-minute bullish, can I take a buy trade here?
No trade.
I can't take a buy trade. My entry time frame is giving me a bullish QM, but I can't take it because I need two more time frames with this. So if I don't have directions here, I can't take it. Now let's say 5-minute also gave us a bearish QM. Now can I take the trade?
Yes.
We
Yes.
can.
Why? Because I have entry plus two time frames. Great. Now let's say I have daily bearish, 4-hour bullish, 1-hour bearish, 5-minute bullish.
No trade.
No trade.
No trade. No trade. Even though entry is giving me a QM and 4-hour is also with me, but I need to have two time frames other than the entry time frames. It should have been, even if daily was at least bullish, then I would have had two time frames. Here I only have entry time frame and one time frame, so I'll not do. So always remember, we need entry time frame. Entry time frame can be either 5-minute or 15-minute, whatever you want. And we need two other time frames. Now you know how to do directions. You have something called as a major break, which is 100% these QM patterns are required for the 1-hour time frame or the 5-minute or the 15-minute. And minor breaks are required for daily and 4-hour. And always ignore the first candle because it hasn't closed yet. Cool? And
You mean running candle?
yeah, first candle, by first candle, whatever candle is running right now. Okay. So the only time when the first candle can be included is during the weekends because the market is closed. So the candle has been closed. But the other rest of the time, 24/5, the markets are open. So you quite honestly, you'll have to ignore them. And one
May
more
I
thing.
have a doubt?
Yes.
Yeah, so for the major breaks, we usually look for all the three time frames or only for on our time frame as you have discussed for the
Sorry.
major breaks. For the major breaks, we'll be looking for all three time frames.
I just told you, right? For 1 hour and 5-minute and 15, you need major breaks.
So if we look for all the three time frames or any one of them.
So for entry, though, you will need 5 or 15.
Yeah, okay, got it.
Yeah. Someone has written something in the text. Let me see. Major breaks, 1 hour, 15-minute, 5-minute, minor breaks, daily 4 hour. Okay. Okay, guys, let's take a 5-minute break. I'll just go and get some water and I'll give my dog some food. You can also go take a 5-minute break, but just be back soon. Directions, which is the main thing. Directions is the main thing. You need to be clear with directions. Okay. Now, let's start with something very important, by the way. There's this website, Forex Factory. I'm sure a lot of you guys are aware of this, but this is the website you need to always monitor for red folder news. There are news which are red folder news, high impact news events. You cannot be trading during that. So just go to the calendar every day, set your timings, and you will see whatever date you want to set it. And you can see the timings when there are news. Whenever there is a red folder news, you are not supposed to take trades during that time. So let's say 6 p.m. Today I have CPI, example. I will not take trades until CPI is over. If I'm in a trade before CPI, I need to cut it 5 minutes before this. Prop forms also do not allow you to take trades during the red folder event. So make sure that you are exiting your trades by that time. Okay. So wait for 5-10 minutes after the news ends, then only you can take a trade. We don't care about the other news, but we only care about the red folder news. Whenever you have a red folder news, you are not going to be taking a trade. So let's say this news is about GBP. So in our watch list, we have a pair in GBP Canadian dollar. We will not be taking a trade during that time. We have USD news. We have US. We have US in this, US in this, USD in this. Here we don't have, here we don't have. Here we have US again. Now and it is US index. You will not be taking trades. You will not be taking trades during the red folder news. That is very, very important. Keep that in mind. Now let's talk about the timings. Okay, let's talk about timings, which is extremely, extremely important. I would say that start trading the New York session because the strategy works the best in the New York session. But if New York session doesn't suit you guys, you can also trade it during the London session. But I want to say that it works the best for the New York session. Now, when does the New York session open? Indian Standard Time. It opens at 5:30 p.m. Indian Standard Time, which is basically 8 a.m. New York time. Okay, this is when the Indian Standard Time is, and this is when the market opens. And when it comes to the London session in India opens at 12:30 p.m. Indian Standard Time. RBS, SBR, what time frame we see? What do you mean? I just told you now, you have to see that on the 4-hour and the daily time frame. So 12:30 p.m. is the London open time, and which is the 8 a.m. London time. So if you are, can you guys hear me?
Yes, yes, yes.
Yeah.
Okay. Okay. So 12:30 p.m. is basically, wait, I'm not able to type anything here. Okay, now I am. So 12:30 p.m. Indian Standard Time, which is basically 8 a.m. London timing. This is when the London session opens. So see that for yourself, wherever you live, whichever country you live in. If I want to make this uniform in a way that you all can mark, always remember that there is something called as kill zone. Kill zone is basically 1 hour before the session opens. The 1 hour time period before the session opens is basically called as the kill zone. So it is basically 8 a.m. the market is opening. So 7 to 8 a.m. is basically the kill zone. So sometimes what happens is the winter and the summer timings are different because of the daylight saving time. Winter time frame is different, summer time frame is different, so it keeps changing. I think it changes in April for the summer timing, and it changes in it changes somewhere around October. It changes to winter timing, and it changes somewhere around April for summer timing, and March, I think. And just saying that it happens very randomly according to the sun, when it sets, and stuff like that. So to make it uniform, I'm just telling you 7 to 8 a.m. So 7 to 8 a.m. London is basically London session, right? Which I told you. The way you can do this is, one second. Okay. So 7 to 8 a.m. London. That's the kill zone time. Let's mark it. Just go over here. You'll be able to see a lot of timings over here. Look for London over here now. London, where is London? London. Here, London. Change your timing to London. Okay. Now you have changed to London. Now mark. Okay, let me do on some other pair. It's always the best to do on some other pair, not NAS. So now the timing I have set to London. So all of this is basically according to London. Okay. Now I'm going to mark 7 to 8 a.m. So I have, look at this. This is the 7 a.m. candle, right? So I'm going to mark the 7 a.m. candle like this. Let me go on a smaller time frame. It just makes things simpler. So this is 7 o'clock. This is where London kill zone opened, 8 a.m. Where is 8 a.m.? This is where 8 a.m. So I just marked vertical lines at 7 a.m. and 8 a.m. This is my kill zone window. What did I say? 8 a.m. London, the London market's open. What is 8 a.m.? 8 a.m. I've marked here on the London time frame. Now go back 7 to 8 a.m. So you know this is the kill zone area and this is where the London opened. Just go and change it back to your time frame. My time frame is Kolkata. So now look at this. I'm placing the cursor here. Do you see vertically what the time is? I think I'm sitting there. Uh-oh. Okay. Oh my God. Anyway, do you see that 11:30? Oh my God. Yeah, do you see that 11:30? So where I place the
Yeah,
cursor, the timing is basically 11:30. Now, see this. The next line which I marked was 8 a.m. and look at that. It's 12:30. So now you know what exactly timing your London market opens. So whenever you're getting confused, just do this. Even though I will tell you guys whenever the winter summer timing gets changed. But just to be safe, you need to also know how to do it, right? Even when I'm not there. So yeah. So the same thing you have to do for New York as well. Change it to New York. New York. Okay, I change it to New York. Now let me again mark New York 7 and 8 a.m. Where is 7? I have 7 over here. Let me mark 8 a.m. 8 a.m. is here. I marked 7 a.m. and 8 a.m. of New York. Now I change it back to my time zone, wherever you live, change it to that. I am changing it to Kolkata. And now look at this. This is 16:30, 4:30. So 4:30 in the evening is when the New York session kill zone opens, and 5:30 is where the New York session opens. Is the timing clear for the kill zone and the session?
Yes, Soumya.
Very simple stuff. Whenever you're ever getting confused, just do this. So this window is the kill zone window, and this is when the New York session opens. This window is the kill zone window, and this is where the New York session opens. Now let's talk about
Instead of just staying on Indian time zones, if we do this trick, Soumya, we will eliminate that daylight saving confusion, right?
Yes, yes,
Okay, yeah. Timing, trading view automatically takes that is my question.
yes,
Okay,
yes.
thank you.
So 7 a.m. London time, 7 a.m. New York time is going to stay the same for them entire time.
Yes,
It's
yeah,
us who has to take that into account.
sure, thank you.
Welcome. So yes, so we have marked that. So now let's talk about Asian session. This is another important session. This is one of the most this is basically, you can call this Tokyo session, call it whatever you want to, but this is somewhere around 2:30 a.m. to 9:30 a.m. Indian Standard Time. Wherever you live, please change it according to that. So this area is going to be our Asian session. So let me repeat. 2:30 a.m. to 9:30 a.m. is going to be our Asian session. 11:30 a.m. to 12:30 p.m. is going to be our London kill zone, Indian Standard Time as of now. And we have London going on from 12:30 till 4:30. Why? Because 4:30 p.m. our New York kill zone starts, right? 4:30 to 5:30 New York kill zone starts. So until 4:30, the entire session from 12:30 is going to be the London session. And New York opens at 5:30 p.m. and it goes on, let's say, till 2:30 a.m. because that's when the Asian session opens. This is the way you have to basically keep this. Timings are extremely, extremely important. So make sure to always have the timings correct. You cannot go wrong with the timing. This timing is going to be 100% required for us to remember. So these are the important sessions. What did we discuss? We discussed the Asian session, which is in the midnight for us, for Indians. It's during the midnight. And the rest of it, this is the London kill zone, 7 to 8 a.m., which is 11:30 to 12:30 p.m. And 12:30 the London session starts. It goes on till 4:30 p.m. and it started time, and 4:30 to 5:30 is basically the New York kill zone. And then 5:30 to, again, Asia is going to be the New York session. Okay. Is everybody clear with the timings?
Yes,
yes.
Soumya.
Okay, cool. Good. Now let's talk about major liquidity pools. which is a very big factor when we are taking trades. Liquidity pools. We have major liquidity pools in the market. What are the major pools of liquidity? They are the previous daily high and low. We have session highs and lows. We have kill zone highs and lows. Primarily, let's talk about them. These are basically major liquidity pools. What do I mean by liquidity pools? Let's say this is the daily low. Okay, maybe let me just show you in a candle first. Let's say this is the daily candle, previous daily candle, and this is the low. This is the high. Now, I said previous daily low and high is going to act like major pool of liquidity. This is the previous daily high, this is the previous daily low. These are going to act like major pools of liquidity. The rule which you are following is if highs are swept, usually price goes to take lows. If any liquidity highs are swept, price usually tends to go and take the opposite direction, which is the lows. Whenever price sweeps lows, it tries to go and take highs. Okay. Again, I'm saying it tries, it might. These are the words which I'm using. Pay very close attention. I'm not saying this happens 100% time because nothing in the market happens 100% time. So the idea for us is if the price does this today, chances are, since it has swept the previous daily high, chances are it can go down now. Okay. Let's say today's candle does this first. Since it swept the previous daily low, chances are that it might go up. Okay. So when liquidity highs are swept, it goes to take liquidity lows. When the liquidity lows are swept, it takes liquidity highs. Also, let me just see who is in the meeting. Okay. Okay. Now let me just see the daily time frame of Euro USD. Let's just like normally, let me just see what's happening in the market. Let me ignore this. Let's see this. Okay, didn't do anything. It didn't do anything. This didn't do anything. This didn't do anything. Okay, let me take a perfect example that when you will understand. Okay. See this, guys. This candle. It closed bullish. It's a green candle, right? A very tiny body, but green candle. It has such a big wick. Price suddenly reversed from this area. Why? Because it swept the daily low. Since it swept the daily low, it suddenly started reversing and started going up. Similarly, what happened here? This candle. What did this candle do? There's a green candle. Here I have a previous daily low. This candle swept the low and then went up. The candle swept the low and then went up. Cool? Let's see this. This candle gave us a very big rejection, a very big correction from here. Why did it give such a big candle? What did it do? What high side liquidity did it sweep? It swept these highs. Look at this. It swept this high. It swept this high. A lot of different things, right? It swept this high and that's when it went back down. This, I told you, it swept this low, went up. This, it swept this low and started going up. Do you see how powerful that is? Look at this big candle. Where do you think? Why do you think the candle reversed? Why do you think this candle has such a big rejection? This swept previous daily low. And like I said, when lows are swept, price tries to go up. When highs are swept, price tries to go down. It swept this low, started going up. See, right? Here, look at this. There's a wick here. So price did sweep previous daily low, and from there it started going down. So are you able to see this? Are you able to understand? Now, this is also a task which I want you guys to do. I want you guys to go on TradingView. Obviously, after the session, you need to backtest each and everything that I'm teaching. That's the only way for you to understand every single thing deeply, right? I only have so much time that I can tell you the entire strategy, but a lot of backtesting is to be done by you. So that is the daily time frame, lows and highs, which act like major pools of liquidity.
So,
Yes?
I have a small question. In the recent example, there is a huge wick that swept the previous low. Yeah, this one. So, because that's such a big rejection, I was thinking, can we also assume that it swept all the session lows, Asia, London, and New York, such a big wick?
Oh, but that's what I'm saying. So prices fractal, what we are seeing on the higher time frame, when we actually go into the smaller time frame, it might have swept some low side liquidity inside the candle as well, like you mentioned, the sessions. So that's my point. Now, don't just think that, oh, it's just a small wick, how much money would we make in this? When you actually go to the smaller time frames, this would have given you good money.
Okay. Okay.
So now let's go to the daily. I explained to you how it works. Speaking of the Asian time frame. Now, this is, let's say, the Asia price action. Okay. You know the timings of Asia. I told you it's like 2:30 to 9:30 a.m. So this is the Asian session. Let's just take an example. Now, what is the Asian high? In my time zone, the highest point is going to be my Asian high. In my time, the lowest point is basically my Asian low. Now, I know both of them are going to act like liquidity sweeps. Both are going to act like liquidity pools. So let's say Asia ended, price is going like this. Price swept the Asian low and gives me some buy setup. I can take the buy setup. Why? Because I know Asian low is also swept, which means that now price might go to sweep some high and I can take high. Okay, another case. Let's say price is like this, price swept the highs. Now I know that price swept the highs and it can go down now. If I get a short trade, I can take shorts. Basic stuff. Same thing. Instead of Asia, let's say this session is London session. You know the timing of London session now? It's from 12:30 p.m. Indian Standard Time till the New York Hill Zone. So that area is basically the London session. Now let's say price swept the London highs. You know that this London highs have been swept, so price might go down now. Let's say the price swept the London lows. You know the price swept London lows, and now the price might go up. Similarly, if this is the New York session, I know that the price swept the New York high. Now I think price will go down. If there's a short opportunity and if the other things are aligning, I can take a short trade. If this is the London low, if this is the New York low, if the price swept the New York low, I know that okay, lows have been swept, price can go up. Are you understanding how I'm going to be using the liquidity?
Yes, Swapna. And we need to use this
Yeah.
decision in conjunction with the 2 time frames and entry.
Yes, of course. Of course. Everything that we are doing, we are going to use it in alignment with the, like, it's going to be a mixture of all of the things we are learning. We are going to align it. We will see time frames, we will see directions, we will see liquidity sweeps, and then we will see entry time frame. So it's not just anything, we are not using anything independently. Okay? Okay, so this
Yeah.
is what I said. Now I also said that we have something called as kill zones, right? Kill zone is the 1 hour before the session opens. Kill zone highs and lows also act like liquidities. Kill zone highs and lows also act like liquidity. Let's say this is the zone of London kill zone. London kill zone high. Oh my God, they have to seriously start construction right now. London kill zone high and London kill zone low. Price swept kill zone high. Now I know it might go down. Price swept kill zone low. Now I know price might go up. This is the New York kill zone. Price swept kill zone high. It might go down now. Price swept kill zone low. It might go up now. These are the different types of pools of liquidity how we use. Are you guys with me so far?
Yeah, so actually, I'm having it out. Like,
Yes.
So,
if we have NY kill zone high swept and like there is, we should wait for the London high to be swept, or we can take an entry if it forms it.
Who is asking the question?
I'm Avinash.
Okay. Yeah. So I will also come to that. So we will see when we need which liquidities to be swept. Okay. So that's the two things I just told you guys. The first thing is directional sweep. Direction is extremely important. Okay. So you need directions. First thing. Anything that I'm teaching, you cannot go wrong with direction. You need the directions with us in all times. And then we are going to see liquidity. We will need liquidity sweeps. I can't believe they're actually doing construction right now. Sorry, I'm just getting angry. Okay, so where was I? Directions. After directions, we are going to be seeing liquidity sweeps. We have our timings. The trading window. When can we take a trade? We can start looking for a trade from 4:30 p.m. Indian Standard Time to 8:30 p.m. Indian Standard Time. Don't look for trades after this. So these are the timings where you can, guys, can you actually hear me, or is the construction actually too loud?
No, you're clear.
No, your
No,
voice is clear.
We
Okay,
don't
I
hear
don't know.
anything from you.
Okay, so it's just me. Actually, my mic is pretty good, so I guess it's muting that, but whatever. Okay. So 4:30 p.m. to 8:30 p.m. is the timing wherein you will take the trade. Cool. Now, what we are going to do is we are going to look for entries and how I will take entry. Now, how you will take entry? Obviously, always the first thing you will see is directions. You are going to always check for directions. You need three time frames, right? We already discussed that. One is the entry time frame and the rest are the other two time frames. Now, what is the entry criteria? Entry criteria for a bullish trade, we need a pattern like this on either the 15-minute or the 5-minute. And we need a bearish setup like this. These are basically the major breaks which we've been seeing, either like this or like this. This is for shorts, this is for longs. This we need in a entry, in the entry. But here's the catch. Until now, when we are seeing directions, we would just be seeing the recent price action where we can take a trade and so on. Wherever we had the recent QM, that would be our direction. But now, since we are taking entry during our timing, we want the QM to give us some more important information in the smaller time frame. Let's say this is the London lows. And let's say this is the New York kill zone. If New York kill zone gives a setup like this, and if the directions are aligning with me, it's very good. I take a long trade here, stop loss always below the QM low, and I am going to target a 1 to 3. Why? First of all, directions are in alignment with me. Then I want a liquidity sweep in my time. I want a liquidity sweep to happen. So my timing is here. My timing is basically kill zone. London kill zone swept the London lows. Sorry, New York kill zone. Sorry, New York kill zone swept the London lows and then gave us a QM. The QM involved taking some liquidity. You need your entry QM to be involved in taking some sort of liquidity. Whether it is the London kill zone, whether it's the New York kill zone, whether it's the London session, whether it's the Asian session, you need your entry QM to sweep some liquidity. Are you understanding?
Yeah.
Yes,
Soumya, could you
Okay.
repeat that once more?
Okay. So I said that until now, when we were using the 1 hour time frame to take trades, to take the direction, to identify the direction, we were just looking at the recent break and identifying the direction, right? But when we are looking for entry, we are still using the same QM pattern on 5 or 15 minutes to take entry. You want to take your entries on 5, you can take on 5. You want to take on 15, you can take on 15. But you will need a pattern like this to take a buy. This is our major break, right? We want this pattern to have swept some sort of liquidity. We want this pattern to be involved in sweeping some liquidity. Let's say London lows, today's London lows are here. New York kill zone opened and gave us a pattern like this. This will be an important QM for me. Why is it an important QM? Because not only is it just a random QM, it also swept the London lows. Got it?
Got it, Soumya.
Okay. And similarly, if we are going to see an opposite trade, this can't be just any QM. We want this QM to take a trade. We want this to have swept some liquidity. Since this is a bearish QM, it needs to have swept some high, whether it is the London high or the London Kilzone high or the Asian high. It needs to have swept some highs. Okay. That's the way we take the trade. Now, if I, in simple terms, show you guys some trade, even though you have stuff to learn right now, let me just give you like an example to just help you put this into what do you say, to just help you put some perspective. Okay, Wednesday, UCAD. Let's go to that for now. Wednesday, this Wednesday, I had a trade on USD Canadian dollar. Okay. Let me just go here. Okay. Let me wait for a QM on the 5-minute time frame. Okay, here's where I had the QM. Okay. So what is this? This is the 1715 cattle, 515 cattle. I had a setup here. I saw first of all, let's see the liquidity sweep. First of all, my kill zone started at 4:30 Indian Standard Time. So this is 4:30 Indian Standard Time. So I can look for trades after this. Has a QM been made after this? I'm just removing this. Yes, I have a QM here. Where is the QM? The QM is white candle, red candle, white candle, red candles, and here VIX went below this, which means this has been swept, and then a break. This is basically a QM on the 5-minute time frame. So I can take a trade firstly. Is this an important QM? Did this sweep some liquidity? Let's try to zoom out and see what is this. Okay. So where were today's London lows? What is kill zone starts at 16:30, which means London ends at 16:25. So what are today's London lows? The lowest point of London today is the 16:25 candle. Has the QM swept the London lows? Yes. It's
Yes.
not a random QM anymore. It has
Yes.
swept an important pool of liquidity. It's not just a random pattern which we are seeing. It has swept liquidity, which is great. Now I have an entry criteria on the 5-minute time frame. During our session window, we can trade after 4:30. We already know that. Now this has happened. Cool. I have a QM and it is not a random QM. It has swept the London lows. What is the step which I had to do before even seeing this?
Seeing major and minor.
Yes, I need directions. I need to see directions. Only then I can look for entries. In any case, let me see what the directions are. So I was in the daily time frame, and what do you think the direction was of daily during that time?
Bullish.
Bullish.
Bullish? Simple stuff. The last break was here. This was bullish. Great. Then I went on the 4-hour time frame. And what did 4-hour do?
Bullish.
Last candle is not seen. Bullish.
You sure?
Mm,
No,
Bearish.
no.
Bearish.
Bullish.
bearish.
Why
We
did,
got
why are you saying bullish? Can you tell me? Who said bullish? I want to know why you said bullish so I can clear your doubt basically. Does anybody think this is bullish?
No, bearish. Actually, at the first gap,
bearish.
there is a green candle and red candle there, right? So I think the next green candle swept that high. So at the first,
Sorry. Repeat.
yeah, when we see suddenly, like we thought the candle first red and green candles, right? Green and red candles, the left one.
Okay.
Yeah, we thought that swept the high and we thought that bullish, but after that there is a break over down. So
Yes.
it's very
Breakover upside.
Yes. Always see from the right side, go behind. Always see from the recent price action. Do not miss a single candle. So you see
Yeah.
this we will ignore. This you saw, this didn't do anything, this broke here. So 4-hour is bearish. Okay. So what did we see? We saw the daily is bullish, 4-hour is bearish. Now let's see the 1-hour time frame. What is 1 hour? What do you think 1 hour? What do we do in 1 hour? We see major breaks.
yeah.
What's the time frame here? Tell.
It's bearish.
Sorry, 1 hour.
Bullish.
1 hour
Bullish.
is bullish.
Who said bearish?
I did.
Okay, why do you think it's bearish?
it has broken the support over there and
Over
down.
here?
No, little up on the left side.
Here? Is this what you're saying?
Yes, yes.
So you are saying that this is the last QM and so the direction is bearish.
Yeah.
So are you sure there's no other QM after that in the recent price action? See again, is there no QM after that?
There is, yeah.
Yes?
But it's,
See this.
yeah. Okay.
Right.
Now,
Green.
So are you going to see this or this? Always the recent price action. We have a bullish QM. So the direction is bullish.
why is it called a QM? Just a quick question.
Basically, the full form of QM is basically the Quasimodo pattern, and I don't know how to say it, so I just say QM. It's actually Quasimodal, I don't know, whatever.
Okay, got it. Thanks.
Hey
So we
Soumya,
need a short form of QM.
I have a question too. So the recent that you're talking about, the recent QM, that is
Yeah.
just inside an inside bar candle. So will that count?
Okay. So you call this inside candle. I will show you what I will do. I take this red candle, opened here, closed about here. That's how you mark the red candle. Green candle went up. These red candles went below this low and then went up. Always use the path tool to actually mark it. It's not inside. If I even go on the line chart, you can very clearly see it's a QM pattern.
All right.
Okay. So coming back, we were seeing that daily is bullish. 4 hour is not with us. 4 hour is bearish. 1 hour is bullish. So, and we got an entry on 5 minutes. So can I take the trade? 5 minute gave me a QM. It also swept the London lows, right? Can I take the trade now?
No.
We saw that. No, we have daily bullish. We have 1 hour bullish. And we have 4 hour bearish. We have 5 minute
hour,
bullish.
1 hour bearish, right? So,
No, bullish.
Yes, we can take it. We can take it.
yeah, okay.
Yeah, we
Bullish.
can take it over here.
We can take a trade. Why? Entry time frame is bullish and other two time frames are bullish too.
Yes.
And the QM is an important QM. A liquidity has been swept. Now what I'll do after the QM has been formed, now I can take a trade. So I can take a trade. Before we take a trade, we are always going to say, okay, is this a QM right now yet, guys?
No.
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 Not yet.
We need the candle to close
Break
above.
over the resistance.
So even if I take a trade, I always need to know, are there enough reasons for the price to go up? We have a reason. The London lows have been swept, so price will tend to go and take highs. What else liquidity I have here? Okay, today's London highs. Today's London highs are here. Today's London highs are here. So I have good targets here. I know that price can go up. So I'm going to wait for entry. Okay, this candle closed there, so I can just take entry over here. Stop loss will always be below the QM or above the QM, depends on what you're taking. And let's say you are going to take a 1, 2, 3. Let's see what happened. Okay. I took a break even on this, just saying, but this was a valid trade. I'll also tell you guys what my break-even criteria is. Do you get it? You have a QM here, you had directions with here, you got your entry here. Like the moment QM closed, let's say you took the entry, SL is here, and price went up, and you easily made a 1 to 3, guys. You got an entry at what, 1720? At 1920, it was met. And now let's see something. Okay. Okay, guys. So price went here, and right from here, price started going down. Why do you think price changed its direction here? Was there something here?
It swept liquidity.
Got some liquidity.
Exactly. Exactly. Yes, you're saying something?
No, I just said it's sweeping the liquidity.
Yes, yes. So it is sweeping the liquidity. Very, very, this is something, guys, if you backtest this now, you'll actually be mind blown. You don't have to trust me. You don't have to trust me. You don't have to trust my strategy. I just want you to like do it, test it for yourself, and then tell me if like you need to have faith in the system, right? To also believe in the strategy that I'm teaching. So yeah.
So my
So
quick
that
question.
yes.
Where exactly do you enter the trade in that QM pattern?
Okay. What's your name?
Chandra.
Okay. Okay, so it really depends. Sometimes, okay, so this is the reason why I'm saying that always mark what all other pools of liquidity are there. Now I know for a fact that okay, price can go till here. So in the moment QM closed above, I can directly take a trade the moment it closed. Because even when I put my stop loss, I'm still getting 1, 2, 3, right?
Yes.
Yeah, could you
Let's
please draw the QM pattern so that can be followed?
sure.
Also, Soumya, out of topic maybe, how is the psychology when it almost is hitting SL, na?
Yeah. So I will come to that also. See, this is the
Sanjay,
QM.
can you draw like a horizontal line exactly where you put the trade in that QM pattern?
Okay. So I first waited for QM, right? This was my QM kind of, and it broke here, right? And what broke this? This is the candle which closed above this area. This is where the QM completed. The moment QM was completed, I put a market order right there, stop loss below this low, and target of the highs. This high was my target.
So the candle that broke the QM, that is the candle body, the top body you entered the trade.
Yes.
Okay.
Hello, Soumya.
Now, hello.
Yeah. Actually, while breaking the QM, like if it gives some impulsive move or a sudden big candle, should we wait for retracement or do we just miss the trade?
Yes. So in this case, I entered a market order. Why? Because my RR was looking good. Let's say this candle was not so small, and if this was a very big green candle. Okay, let's say this candle was like this. And in that case, I cannot do a market order because then my targets, I mean, what is this? This is not even a good RR. So in that case, what I'll do is I will put a limit order and wait for a retracement. Something like this. I'll wait for the break area to be tested again. And here in the limit order, I would enter and I would go up. Got it?
Yeah, got it. Like one more doubt, like when to break even the trade?
Coming to that step by step.
One question, Samya. So here, the QM when from the QM, the low has been swept by a green candle. So is that valid?
This?
Yeah.
See, that's okay. Why? Because this is not a single candle. These are so many candles, right?
Okay.
The examples which you guys were sending on the group was like a 3 candle pattern in which the same green candle also broke the structure. Here you can see liquidity sweep was taken by the green candles, but breaking some other candle did, right?
And
If
for
the same
sweeping, we
candles,
will consider wicks mostly rather than
yes,
color.
yes.
Yeah.
Always remember the logic. That way you will not forget it. Liquidity means price traded in that area. Price traded below that swing area.
Yeah. Also, while breaking in the QM, while breaking the candle, so should it be there should not be any lows? It should be like same single color candle, or there can be
It's
it can
okay.
form any lows. Yeah. Okay.
It can.
Oh, sure. That's it. Thanks.
Okay. So do you guys see the same steps you are doing every single day? You are waiting for directions, you are waiting for your trading time frame, you are waiting for the sweep and entry pattern, and you are taking the trade. This is a little bit of overview. There are 2, 3 more things you will have to know to actually minimize your losses in this strategy. But usually I like to take 1 to 3s. So make sure to take trades like this. Here, what I did is, okay, so I took my trade, I entered the trade here, stop loss below this low price, almost hit my stop loss, but it did not, and it started going up. Now, what did this candle do? What did I say? Kill zone high is also major pool of liquidity, but we took a trade inside the kill zone, so I can't say much. Now I see that price went up and it was trading here. I don't know why, out of fear, I just trailed my stop loss here to break even. I did not have to do that. I'll tell you when you need to trail your stop loss to break even. I did whenever another opposite side of liquidity is being swept, or whenever you have a break of structure like this. So here, ideally, you know what I should have done? I should have waited for the price. So price went up, came and was going up. The moment this is broken, then I could have done break even. I'll show you guys more examples. But here I got scared for no reason, only because I saw that price came so close to my stop loss. So I trailed it to break even right after this big move. And then what happened? Price came, hit my break even, and then went and gave my target. So don't be in a hurry to trail it to break even. Always have a reason for why you are trailing your stop loss to break even. Trail your stop loss to break even when you think that price has swept another pool of liquidity. Let's say here I have the Asian highs. Let's say London highs were here. Just an example. Now the price went here. I know that price has swept an important pool of liquidity. I know that price has swept the London highs. Now I know price can go down. So this is a good time for you to trail it to break even. Are you guys with me?
Yes.
Yeah.
Yes,
Forex Factory news? Yeah, there was news, which is why I had entered a little bit after the news ended. I remember some news was there. Wait, someone is on the gate. I'm not sure why. Okay. Okay, guys. Every single day we're going to do the same thing on a step-by-step basis, action by action, step by step, every day. We're not going to be doing anything different. After a point, this is going to become so monotonous and it's going to be a part of your routine. It's going to be boring. And the moment you see that it's being boring, that's when you know you're doing it right. You don't need, imagine you made it 3% on this trade. If it's a 100K account, you risk 1% on this trade, you risk $1,000. You made $3,000 with this trade. Do you want to trade anymore this week? Aren't you happy with $3,000? Let's say your 200K account. You made literally $6,000 in just this trade. Take the best setups where all the confirmations are there and do not overthink about taking more trades. Do not overthink about every single thing. Just allow yourself to understand this, allow yourself to take the trades. Okay. So that is little bit, that is exactly the strategy which I do. Now there are few things which I also like to check before I enter into the trade, which is premium and discounted levels. Can you give a bearish example? Yes, I will give you many more trade examples. Before that, I want to complete the concept first, then we can jump onto the charts. So we have premium and discounted levels. Now you are going to the market, you want to buy an iPhone. Today let's say iPhone 20 released today. You go to the market and obviously if you want to buy on the first day, it's going to be very, very expensive. Why is it very expensive? Because the demand for iPhone is very high. So the price of the iPhone is also very high. Now, the price wherein you will be getting the iPhone today, since it just released, is at a premium price. The seller is going to profit off you. The seller is going to give it to you at a premium price, right? If you wait for 6 months, the price of the same iPhone is going to fall. The price of the same iPhone is going to become less. You will get it at discount price. So when you give it time, price usually when the demand dies down a little bit, price will go lower and it will give you the same product at a discounted price. As a buyer, you want to always be the one who is buying something at a discount, like any other market. The way you buy shoes, perfumes, clothes, you always want to be buying things at a discount, right? You want to buy cheap and sell high. Whereas if you are the seller yourself, do you want to sell your goods at a cheap price or do you want to sell it at a high price? You obviously, the goal of a seller is always profit maximization. You want to have a high margin. You want to sell something at a high price so that you are basically able to make profit, right? So, two concepts. Buyers always want to buy everything at a discount. Sellers always want to sell everything at a premium. Basic stuff. Now, how do I actually use this premium discount regions and stuff in trading? I use the Fibonacci retracement for this. Do you guys know what Fibonacci retracement is? Does anybody here use it?
Yeah,
Yeah, how do you use it?
like we mark from swing high to low and try to take a trade at golden pocket.
Okay. How do you know what is
We
okay.
mark based on the view.
What
Sorry?
you are
We
saying
mark
something?
based on the view. I mean, Fib is used based on the view, right? First, we will do the time frame alignment, then we will mark the swing high to low or low to high.
Okay. So this is my price. Okay. Can I mark this swing to this swing? Is that okay? I can do that. Someone is looking at the chart. They are saying here buyers came, so I'll mark from this low to this high. Someone is saying that, oh, actually, when I zoom this out, the actual swing starts from here. So let me mark from this to this. Everyone has a different method of marking Fibonacci. Nobody is right, nobody is wrong. It's just totally up to you how you want to mark it. But I will just teach you guys how I mark it and how I use it, because if you plan on using my strategy, then I can only give you the things which I use, right? Whenever you are marking the Fibonacci retracement, right? Basically, Fibonacci is basically talking about the premium and discount area. First of all, these are my settings of my Fibonacci retracement. Go on settings and see. I've literally unticked everything. So if you don't know Fibonacci, guys, you just have to go here. You will have something like Fibonacci. You will have something as Fib retracement. When you go on Fib retracement, you get to see this, and you can go on settings, and you have to untick on everything except for 0.5. If 0.5 is not there, just go tick something and go here and type 0.5 and it will get plotted. So basically, I want everything unticked except for 0.5. 0.5 is basically the 50% level. What I like to do is when a range is being created, 50% level of the range is the area. Let's say this is a bullish. Let us say this is a bullish trend. And since this is a bullish trend, I take my Fibonacci and I mark it from the low to the high. And what I consider is the area which is below the 50% area is going to act like a discount area for me in a bullish scenario. If I'm going to mark it in a bearish scenario, something like this, then what I like to do is I take the Fibonacci from the high and the low, and I know that whatever is over here, this area is basically called as the premium area above the 50% level. So as a seller, we always want to be selling from a premium area. As a buyer, we always want to be buying from the discounted area. How do I mark this? I mark the Fibonacci when a range is completed. Okay. Now, how do I say a range is completed? I mark from QM to QM. I always say that whenever a QM is starting, that's when a new range is starting. Whenever the QM is ending, that's when a range is completed. From the QM low to the QM high, I can basically mark the Fibonacci. That's the way I do it. So what do I mean by that? Let's say that I have a QM, I have a bullish QM, price is going up, the range is still going on. The range will only be complete when a bearish QM is formed. That's when the range is completed. A range starts with a QM, ends with a QM. That's the way I see it. Now here what we can see? We can see that here's a bullish QM, here's a bearish QM. So I take the Fibonacci. Here is the QM low and QM is here. So I just keep it here and extend it here. The below area is my discounted area. Now I know that I can look for buys after price comes here, because that's when I'll be in discount. A lot of times what happens is when you are looking for setups here, you will get a setup here, everything will be aligned, you will take it, it takes SL. Now you don't have money left to take the trade. Here it will give setup again and go and hit your TP. But you will not have money to take this trade because you have taken this and you are already wrong. So this is the way I mark a QM to QM. We'll see this on the charts also. What will I do for a bearish QM? I have a QM like this, price is going down, and I have a bullish QM like this. Now I'm going to mark this. A range is complete when a QM and QM, when the range is enclosed with two QMs. I mark from the QM high to the QM low, and anything above this is basically going to be my premium area. Let's see. And I like to do this on the 1 hour time frame mainly. It's amazing to do on the 1 hour time frame and the 4 hour time frame, but I like to do it on the 1 hour time frame most of the time. So what I will do is, right now, what is the last QM here? Is there a QM here? Is there a bullish QM or a bearish QM here? Anything. Okay, guys, just look at this particular price action and tell me, is there any bullish or bearish QM here? Nothing, right? You don't even have bearish QM, you don't even have bullish QM. So nothing. So what was the last QM? Last QM, last QM. This is the last QM. I see the last QM, green candle went up, blue candle came down, white candle. So I have a bearish QM here, which means the range has started over here. I have a bearish QM here. But has the range been completed? No, the range has
No.
not been completed. So I will not mark my Fibonacci. I am not
Hello.
going to. Hello?
Yes, only like you have marked a bearish QM here, right?
Yeah.
Yeah, can't we go back and check for a bullish QM and mark it as a range?
But we are in a new range now, right?
Okay, okay, yeah, got it.
You see, if I mark here, what's the point? That's over. We are here now. We will
Yeah,
always see the latest range. No point of marking any previous zones. That has already been over. So the point is, I have a bearish QM here, but I don't have a bullish QM here. There is no point for me to mark this and then be like this. It can happen, but it's not. I mean, why would you do that? Wait for the range to be completed. I can keep selling until a bullish QM gets formed. Now let's say a candle tomorrow closes above this, a green candle. Let's just say. Then I will have a QM, right? I'll have a QM if the green candle closes above this. Now I'll have a bullish QM. In that case, I will say the range is now completed. Why? Because I have a bearish QM here, a bullish QM here. In that case, what I'll do, I'll take Fibonacci, mark from the high point here to the low point here, and I will only look for shorting opportunities once the price goes above this premium and then gives me a setup. Let's do it for NAS 100. Sure. Let us go on the 1 hour time frame right now. Okay. So right now it has created a bullish QM. Clearly, you can see it's a bullish QM. What was the last bearish QM? The last bearish QM is somewhere like this. That is the last bearish QM, right? So right now, what will I do? I will take my Fibonacci, plot it from the high to the low, and I'm gonna extend it. Interestingly, this was my QM, but price already went above the discounted area. You can see price already swept it and started going down. So this is not valid anymore. When the chart was looking like this, let's say this is a QM, okay? Let's say this candle closed above this. I don't know if it did, whatever I think it did. No, it's just there. So what would I do? Here I would mark the QM from the high to the low like this. And I will only take short opportunities once price reaches that level. You see what happened? Price did reach that level. You getting it?
yeah.
Excuse me. Okay. So let's see more. Let's see GBP Canadian dollar. Let's see what it has. Can I mark anything?
And this fib, sorry, Soumya. And this fib we will only mark on 1 hour time frame or execution time frames also.
Only 1 hour and 4 hour.
Okay.
4 hour is also not necessary, but 1 hour for sure.
Okay. Thank you.
Now we are on GBP Canadian dollar. What is the last QM? We don't have a bullish QM, but we do have a bearish QM. We have a bearish QM. So a range has started now. Has the range been closed yet? No, we don't have a bullish QM. Until then, I don't have to mark any premium discount. Doesn't this way of using Fibonacci makes it very easy? You know exactly when a new range is starting, you know exactly when a new range is ending. So this makes things much, much, I would
Hello?
say, seamless. Yes.
Yeah, when a range is not completed, like there's no possibility to plot the fib, right? So then we can take an entry if a setup forms without fib confirmation.
Fib is not compulsory.
Yeah.
If you don't have range, then you won't plot fib. Keep things as simple as possible. If fib
Yeah.
is not there because the range is not completed yet, you don't care.
Okay. Yeah.
But
Fib gives
but
extra
still you
confirmation.
take the trade.
Sorry?
Sorry, the range is not complete, but so you cannot put the fib. But if everything else is all the other conditions are meeting, do you still take the trade?
Sorry, can you repeat your question?
So the fib, the range is not complete, so you cannot put a fib. But in lower time frame, everything else, all the other conditions are being met. So do you still take the trade without putting a fib?
Yeah. If the range is not completed yet, how can I put the fib?
Okay. But is it like an optional thing that you use for confirmation or?
See, if the range is completed, then 100% I need to use fib. But if the range is not completed, then I won't be able to plot fib, then it's okay. But if I'm able to plot it and if the range is completed, then I need to use it.
Okay, got it.
Okay. So this is
Uh,
also
in which time frame you use the fib, like 1 hour or 4 hours or one day?
1 hour, 1 hour. I just said that.
Oh, sorry.
1 hour. 1 hour is kind of like a sweet spot to use fib. You can use it on 4 hour and 1 hour both, but 1 hour I would say is the best thing. Okay. What else would I wanted to say? Wait. Okay.
Last
Now,
resort. Last
yeah,
resort, I think.
yeah, I'm coming to that. Now I want to tell you guys about the last resort. What is last resort? I'll show you guys that with the chart only, with the example. Okay. So now we're going to be talking about something which is called as the last resort. And what does that mean? So right now you can see that the direction is bearish on EuroCAD on the 4-hour time frame. What is the area where if the price closes, the direction changes? What is that last resort, that last area where if the price closes, the direction turns to the other direction? Right now it is bullish. So now I know that here I have area. I know this is basically a resistance, and I know that if the price goes up and if the price closes here, then what happens? Then this will be the next direction and it will change bullish. Do you understand? So this point is basically the last resort. Does that make sense?
Yes.
Yeah.
Okay.
Could you please repeat some? Sorry, I went over.
Okay. So right now the direction is bearish. Okay. Because this was the last break. What is the area or what is the last resort where if the price closes above or below, the direction will change? Right now, direction is bearish. Where will the price close for the direction to become bullish? Wouldn't it be this? If a green candle closes like this, it would close above this, then the direction would be bullish.
We are seeing that because
Yes.
there is a break there, Soumya, or just by looking at the swing highs and lows?
No, where would be a minor break? So you are seeing minor breaks, right, for the bearish breaks.
Correct.
Now, where will the direction turn bullish?
If the minor break is invalidated,
No, I've not mentioned anything about that. What is the condition you need for the direction to become bullish?
So it has to break the resistance here, like the above.
Yes. Are you understanding it? Whoever's asking the question. Wait,
yeah, Murthy here, Soumya.
Yeah.
It's still little
Okay,
off.
wait, listen. Try to understand. Right now, we are seeing minor breaks. So right now, I know this is the minor break. That's why the direction is bearish.
Yes.
Where can I say that the direction has now become bullish? If I see a break towards the upside?
Yeah, major break. Yes. Oh, sorry, minor break upside. Yeah.
So if a green candle closes above this, will that be a minor break?
Yeah, new minor break upside.
Yes. So isn't this the last area where if the price closes above, direction will become bullish?
Sure. Yes.
Until there are no roadblocks.
Yes.
So this area is going to be called a last resort because this is the area where if the price closes above, the direction finally changes.
Understood.
That
Yeah.
is the last resort. Let's see more example. It will become clearer. So let's say I am, yes,
Can you please go back to the same chart?
sure, one sec. Yeah.
I think this is okay. You are considering if price goes closes above. What if price goes above the wick and come back down? So we can't consider it as liquidity.
Sorry, I didn't get you.
You mentioned if the price closes above, then it is a minor break. But what if a price goes above the wick and come back again in the range?
Yeah, then to break did not happen.
But it closes above the candle, but it goes highest from the wick.
No, then that's not according to our rules, right?
Means we are not considering wicks.
I'm not sure what you're asking.
Let me write.
Can I answer the question like he is asking if there is a wick crossing the last resort and the body would be below the resort. So would that be an issue?
So that would be good. Right now, I'm not talking about closing. I am talking about last resort. Right now, I said what will be the last resort. I did not say anything about the candle has closed above it or not. I'm saying what is the last resort where the direction can change. The change has not happened yet. So let's not go there right now. Okay?
Okay.
Okay. Let's
So
first clear it step by step. Yes?
there is one question in the chat if you can.
1 second. Soumya, which of this is correct? Bullish QM or both are same? Because sometimes I see first price sweeps previous high, then sweeps the actual low. Both of them look the same to me. Both are okay.
Okay, sure. Sometimes I see most of them are little off and on sometimes. Yeah.
Both are okay as long as liquidity sweep has taken place. Some important pool of liquidity has taken place.
Yeah. Thank you.
Yes, welcome. So let us see again here. What is the direction right now? Right now on the 4-hour time frame, UCAD is bullish. We will ignore the first candle because it did not close yet, ideally. So now tell me guys, the direction is bullish. What is the last resort where the direction will flip?
The blue and
Candle closing.
white
Below
resistance,
the
yes,
red candle. Yes.
that area.
Perfect. So this is my last resort. Because the price closes below this, then that's when I will know that the direction has flipped. So this is basically known as the last resort. You are going to be marking your last resorts on charts. We will see more. Let's go on the EuroCAD. What is the direction of EuroCAD? We just saw. Wait, let's see something else. Let's see GBP Canadian dollar. Latest candle is always ignored because it hasn't been closed yet. So what is broken here? This is broken here. So direction is bearish. Where is the last resort?
Topmost.
1.838 area.
This
Yeah.
is the last resort. Basic.
Yes.
Now, if the price goes above this, I'm going to take the trade. So that is how you are going to mark last resort. And the reason you have to mark last resort is because it basically gives you an idea that maybe price might change a direction. If this is the last resort, if let's say we have 4 hour to be bearish. Right now 4 hour is bearish and we have 1 hour also bearish. We have daily is bullish. Okay, daily is bullish, excuse my handwriting, and we have 15-minute also bullish. So let's say we want to take a long trade. So let's say we want to take a long trade. Let's say our directions are with us. Let's say only 4 hour and daily and 15-minute are bullish, 1 hour is bearish. Now let's say, sorry, oh my God, let's say we are taking, oh God, wait, let's do this again. Right now it is bearish. Where is the last resort? Here is the last resort. And we are looking to take a bearish trade because daily is bearish, 4 hour is bearish, 1 hour is bullish, 15-minute is giving us a bearish setup. Now, let's say 15-minute gave us a bearish setup here. The candle did not close yet. The 4 hour candle did not close yet, but 15-minute is giving the bearish setup here. Now, let's say in the next 1 hour, the 4 hour candle will close. If the 4 hour candle closes above the bullish, if the 4 hour candle closes above the last resort, then 4 hour will become bullish. Everyone understands this?
Yes.
Yes. Then scenarios.
Then we don't have time frame with us. We only have daily and 15 with us. We want 2 time frames with us at all times. So if we get a setup on the last resort, it is risky for us to take trade. If we have a setup on last resort, then at least this should have been bearish. Then I would see these 2 time frames and I would be like, okay. But if there are just 2 time frames in our favor, and out of those two, one is on its last resort, we will not take the trade.
Understood.
Yeah,
Okay.
hello Soumya. Like
I
if
mean,
the closing candle has a much more time to close, we do not have to worry about that, right? Like if it's 40 minutes more to close the candle.
No, you have to worry. If it's gonna close in an hour, you have to worry.
Yeah.
You have to worry because
Could
the
you
timing.
repeat that, Sonia?
See, basically, what do you want me to repeat?
The last, like the time frames should be with us, and the last
Okay.
resort.
Okay. So right now, this is the last resort. If the price closes above this, then our direction will become bullish. Let's say until now, the daily is minus, 4 hour is minus, 1 hour is plus, 5-minute is minus. This is a good, if I get a short setup, can I take this?
Yeah, we can.
Yes.
Yeah.
Sorry. Why? Because entry is bearish, daily and 4 hour is also bearish. Now let's say the price was trading here and here it gives me a setup. Now it is giving me the setup on the last resort. What does that mean? There are chances that when the 4 hour candle closes, it might become bullish. Right?
Yes.
Yes.
Yes. So if you are getting the setup on the last resort, it is risky because you might lose this time frame.
Okay.
So we don't want the
Got it.
setup on the last resort. We want it before. If let's say this is also bearish, and now let's say this, we are getting the setup on the 4 hour time frame, on the last resort of the 4 hour. But And now I don't care. Why? Because I anyway have daily and 1 hour as well. Even if 4 hour turns bullish, I will still be having 2 time frames. That's a different story.
Got it.
Yeah. And if 4 hour was to turn into bullish, obviously 1 hour might have already turned bullish, right?
You don't know. It's not necessary. Sometimes that does not happen.
Ah,
Because we are seeing major breaks on 1 hour. Sometimes you might have minor breaks on the 4 hour time frame, but that is nothing on the major. So 1 hour direction might have not changed. You have to check that. It's
noted.
not
Yeah.
generalized. Okay. That is about last resort. Very important. Always mark your 1 hour and 4 hour last resorts. Let me also quickly show you guys the 1 hour last resort, how to mark it. Right now, I can see that the direction is bearish because this is the last QM towards the downside. So the direction is basically right now bearish. Now, where is the last resort for the, can you guys tell me where the last resort would be for this? It's the 1 hour time frame. So we see major breaks.
Above the last, what can I say? Like, yeah, that candle.
Okay. So this would be the last resort. Why?
Yes.
Because if I take the path tool and if I do this red candle, green candle, red candle, and if the candle closes above this, then this is going to become a bullish QM. And in that case, then the direction will change. Okay?
So
So
in 1 hour for the last result, so we should concern about only the major break or even the minor break as well.
how do we see direction on the 1 hour time frame? Do we see with major or minor?
Both, right?
No.
We
For
take
4 hour and
major.
daily, we see minor breaks, right?
Yeah, in 1 hour we see both, right?
No, in 1 hour, we see only major breaks.
Okay.
Please, guys, that's why I'm saying make notes, otherwise, you might forget it. For the daily and 4 hour, only for daily and 4 hour, we can see major, minor both. But for 1 hour, you need to see only major breaks.
Okay.
Do not forget that. That's very, very important because 1 hour is considered to be one of the small time frames. So it is a small time frame, so you need to be extra careful with it. Okay, so let's see another last resort. 1 hour time frame. Where is the what's the direction right now? I see that the direction right now is bearish. Okay, very good. Direction right now is bearish. Now, where is the last resort? Where do you think should be the last resort? 1 hour time frame, only major breaks.
1.37 level.
1.3711. So
Level,
0,
level.
611. What? I don't know what you're saying.
Sorry, I'm confused. Sorry.
Okay. So right now the direction is bearish. Now I want the time frame to become bullish. So I will want the price to close above this. Why? Because if the price closes above this, then direction is going to be like this. That's going to be the direction. It's going to basically become bullish. This is the last
In the
result.
same, I'm sorry. In the same example that you're saying that you want to wait for the price to close above that resistance in order for the price to become bullish, but in the same setup, would you not plan a short trade since?
We are going to be planning a short trade only. I'm saying
Okay,
if the price is trading near in the last resort and then gives us a short setup, but price is on last resort, then you need to be careful.
okay,
Do you guys
got it.
understand why I'm even telling you last resort?
I'm sorry, I didn't get you. What?
Did you understand why are we even using the last resort concept? So that if we
Yes,
get
in
a
order to
setup.
understand if there's a change, there's going to be a change in the
Yes,
direction.
yes.
Got it.
Yeah, got it.
Okay, now one more thing, guys. We did Fibonacci, we did that. There is something I want to talk about, which is the So there is something called as equal highs and equal lows. These act like major poles of liquidity. Whenever you see equal highs and equal lows, they usually get swept. Look at this. You see equal lows here, they got swept. You see equal highs here, they got swept. You see equal highs here somewhat, they got swept. You again see equal highs here, they got swept. So let's say you have a setup like this. First, you have equal highs like this. Okay? These are equal highs. And then you have a short setup like this. It's very risky to trust this short setup because the equal highs are right here. Rather, you wait for equal highs to be swept and then you get set up. These are small, small things which you will understand with experience only. But yeah, this is also something you need to keep in mind. Now, you can get your entry time frame on either the 5 minute or the 15 minute, right? I keep saying that you can see it on the 5 minute or the 15 minute. The best things on the best thing is so basically 15 minute gives you very late entries. Okay, if you see my videos on YouTube, the older ones, I've been talking about 15 minute because I used to not trade the 5 minute back then, but the frequency of trades on the 15-minute time frame is very less as opposed to the frequency of trades on the 5 minute time frame, which is why I had actually started using the 5 minute time frame. But when you are using the 5 minute time frame, always be very clear with the trade you are taking. And when you have a 5 minute time frame like this, you want to see really big, strong candles to actually trust the QMs. In 15, it didn't matter, but if you're seeing 5 minute candles, then you want impulsively big green candles to take the trades. These are small, small things, which again, you'll be able to understand with experience only. But the reason I'm telling you all this is so even when you come back to this video, when I post it on YouTube, you'll be able to understand all this. Because if you come back to this video now, okay, there are certain doubts. If you come back to this video after a month, your doubts might increase, or your not increase, your doubts might be different now. And all these things, these small, small things that I'm addressing here right now are those doubts which will be solved when you rewatch it then. Okay, one more thing.
Hello,
You are
Sonia.
having, yes,
Can you explain the concept of strong highs and strong lows?
yes, I am. Who's asking?
Yeah, I'm Avinash.
Yes, I will ask it. Actually, I'm doing it in a sequence, so I will come to that. I forgot my
Yeah.
flow. Wait, what was I saying? Oh, yeah. So think about it. Let's say you are getting a buy setup on Euro Canadian dollar and you are getting a buy setup on GBP Canadian dollar. All the directions are same, all the alignments are same. But on these type of days, do not try to capitalize on both because the denominator in both of them are Canadian dollar. Usually Euro CAD and GBP CAD move the same way. See, GBP CAD is also going down. Euro CAD is also going down. So either both of them will hit your stop loss or both of them will hit your TP. Which is why I'm saying that don't try to be greedy and don't take the same trade on both of them. Take a trade on either of the pairs. Just take on one of the pairs. Why? Because both of them have the denominator of Canadian dollar, which means that both of them are obviously they are, they are, how do I even explain this? Both of them are going to react and move the same way. So when you have setups like that, try to trust only one of them. These are small things which will come handy to you later on. Okay. Now let's talk about a concept which Avinash reminded me, which I was going to now. It's called strong highs and strong lows. Now, this is by far the most important thing which you need to see on a daily basis. Because see, let's say you have London lows here. Let's say you have New York kill zone lows here. Let's say I got a QM like this and direction is here. Should I take this or should I wait for it to actually sweep the London lows and then take this? Which QM do I trust? Should I have taken trade here only? Should I have waited for this? Now that's what
Take
I'm going to teach. Avinash, that was your doubt, right?
Yeah, that's
Okay. Okay. So this I'll tell. Okay, guys, genuinely give me 5 more minutes. I'm actually just getting coffee because I feel a little tired. I will be back in 5 minutes and then we will do the strong high, strong low concept. And then we will see the little bit of trade recaps. Okay. Give me just 5 minutes. I'll just get some coffee. Resume. Thank God. Okay. So this concept is a very important concept. It's called as the strong highs or strong lows. And we have to always check this. Okay. So what is this? This is a QM. This is just a random QM that I'm making on the chart, right? Now, if this is, let's say, the Asian low. Now I know this is not just a random QM. This is a strong low. Why is this low? Why is the low of this QM low called as a strong low? This is called as a strong low because it has swept a major pool of liquidities. So whenever lows or highs of a QM sweep a major pool of liquidity, that's when they are called as strong highs or strong lows. Okay. So in this case, it's called a strong low. Let's say there's some pool of liquidity like this, whether it's the New York zone or whether it's the London zone, Asian kill zone, whatever, Asia or kill zone, whatever. If I have a QM like this, now I know this is going to be a strong high. Why? Because this has swept liquidity. If a QM basically creates a strong high or strong low, it's going to be protected. What do I mean by protected? I don't think price will go and sweep it because it's a strong high. It will be protected. Okay, understanding. Basically, I'm talking about QMs which have swept liquidity.
Yeah.
Now, this is, let's say, the New York kill zone low, and this is the New York session. So this New York session QM has swept the New York kill zone low. So this is a good enough confirmation. An even stronger confirmation would be that it has New York session has also swept the London lows. This would be an even better confirmation. So you can trust this kind of QM. If the New York session has swept the New York kill zone, you can trust it if the London session is a strong low today. I'm repeating, if today's London session is a strong low, if the London low is a strong low, those are the days you can trust New York kill zone sweeps. If the London session today has not been a strong low, then you cannot trust kill zone sweeps. I repeat and I'll show it on the charts. You can trust sweeps of just the New York kill zone high or low if the today's London session is a strong high or low. In what cases can a London session of today be a strong high or low? First case is sorry.
no, like can we consider the London low is a strong low if it sweeps the London kill zone low, or it should sweep
Yes.
Asia?
Yes. It can sweep either Asia or it can sweep the kill zone. Both are okay. Let's say today's London session, today's London session. Okay, guys, again, I'm telling you 9:30 a.m. Asia ends. But when does the kill zone start? Kill zone starts at 11:30. This area between 9:30 a.m. to 11:30 a.m. is known as the dead window, the dead time window. Dead time window, if some candle sweeps the Asian high during the dead time, we don't care much about it. We want Asia, if the Asia is swept in the London session for the first time or in the London kill zone for the first time, if Asia is swept in the London session, that's when I can say that today the London session is a strong high because it swept the Asia for the first time. Or let's say this is the London kill zone and today's London session did this and it's been going down. Okay. And here, this is the New York kill zone. This is the New York session and it gave us a setup, short setup. Today, I can trust the London session high to hold. Why? Because it swept the London kill zone high. So today I can trust this QM and I can take a setup. Did you understand?
Yes.
Okay. Let's say today's candle is like this. Let's say this is the Asia, this is the London kill zone. And this is after Asia has swept Asian high. This is the London kill zone. And London session did this. All the directions are bearish. This is the New York kill zone. This is the New York session. Can you trust this QM? This is the kill zone. This is the New York session. Tell me, guys.
Yes. Yes, we can trust because kill zone liquidity is taken in the New York session, right? So we can trust that.
But what did I just say? You can trust kill zone sweep only when the London is a strong high.
Okay.
That's what I just said, right?
Yes, yes.
So today's London is not a strong high. Why? Because today's London started here. It did not sweep the London kill zones. So today's London session is not a strong high. So the best possible setup would be after the sweep of the London highs and then get a setup. Got it? You backtest this, you will understand it better. Rewatch the recording again and again.
So I have a question. If you have to give priority to these sweep sessions, would you give a priority to the, I mean, if you say priority number 1, 2, 3, which one would be 1, 2, 4 for these?
See, there are different cases. Let's say we have Asia. Today, dead time was just doing this. London kill zone did this. London session did this. So what did London session do? It swept the kill zone and kill zone swept the Asia. And now New York kill zone is this. New York session did this. I will 100% take the short setup if the directions are aligning. Why? Because in the morning, Asia was swept. Okay. Today's London is a strong session because London is not a random high. Today's London high is strong because it swept the kill zone highs. So as soon as London kill zone is being swept by New York session and I get a setup, I can take a trade. This is the best thing. Second thing is, let's say this is how Asia looks. That time was doing this and Asian high has not been swept, which is okay. Now you have London kill zone doing this, London session doing this. Today's London session is going to be strong. Why? Because it has swept the kill zone highs and then price is going down. Today's New York session did this. This is the kill zone high. This is the New York session. It swept it. I can take a trade. Okay. The cases what I'm explaining that you can't take trade is this is the Asian session. Let's say price is doing this. Let's say this is the London kill zone and this is the London session. And today I go here and here directions are aligning. This is New York kill zone. This is New York session. Is today's London session high? Strong? No. Because what did this London session do? It did not sweep kill zone, nor did it sweep Asia. So on these days, you can't trust just the New York kill zone. Ideal thing would be to wait for the London session to be swept and then you get a QM. Now, what if I want to take a trade during the New York kill zone? In our QM, we need to have liquidity sweep, right? If I want to take a session before the New York session opens, I want to take in the New York kill zone. What is the major pool of liquidity which will be swept for me to take a trade?
London and London kill zone.
Got it? Perfect.
Yep.
If
Yep.
you want to take a trade in the kill zone, the only liquidity which is there is Asia, kill zone, and stuff, basically. Okay?
Also, Sonia, again, these are many probabilities, and only from your experience you can tell all this. Is there any rule book guide? As we are noting the points down, if we can circle back on any rule book, that will be helpful. Any PDF for it.
I will provide you guys with the rule book. I'm also making one because I also conducted a Telugu boot camp last week. I have told them also that I'll provide them with a rule book. So I will make that and I will send it across. Just give me some time. I will try to send it over the weekend.
Thank you.
Okay. And one more thing. You need to always remember when the price sweeps one liquidity, it goes to sweep another liquidity. Let's say price is like this. Let's say this is the kill zone high. Okay. And let's say you are waiting for a bullish QM because you will get a 1 second. Let's say you are waiting. Okay, let me just do this again. Let's say today price is doing this and you are waiting for, this is the London kill zone. This is the New York kill zone high. And your directions are bullish, you are waiting for sweep. This is the New York kill zone low. This is the kill zone high. You're waiting for QM. The QM is something like this. QM closed now. First of all, inside the QM only, it has already swept the New York kill zone high. You have not gotten your entry yet. If your entry was somewhere here, if the QM closed here and your entry was here, then it's okay. But price already swept the other side of liquidity. In cases like this, you will not take entry. Understood?
Yeah.
Can you repeat that once again?
Okay. So what I'm saying is the logic remains the same. Price travels from one major pool of liquidity to another major pool of liquidity. So if let's say price is doing this, okay, and this is the New York kill zone high. Let's say directions are bullish, everything is bullish, you get a setup. Kill zone low has been swept, QM has been formed, and everything is aligning, including the direction. So I can take the long here, stop loss below the low, and I can place a target of 1:3. Let's say London and all is here. And I also know New York kill zone is also a little bit far, so price can do something like this and go up, okay? Because I have London highs also pending, Asian highs also pending. That's okay. I have New York kill zone also far away, which means price has a reason to go up. Let's say that the QM is forming like this. This is your QM. The QM swept the kill zone low, but it also swept the kill zone high. So it also swept a high side liquidity. So you will not enter in this trade.
Understood.
Because it has swept the high. Now chances are it can go to take out some low side of liquidity. So you will not trust it. If you want to do it, you can, but that is very risky. So don't do it. At least not when you begin with it. So that is about strong highs and strong lows, when to trust your QM, when to not trust your QM, when to do break even. Break even criteria. Whenever another pool of liquidity is swept, set to break even. Whenever other pool of liquidity is swept, set to break even. Okay, let's understand this in examples. Let me first take you guys to a very nice setup first, then take you guys to the rest. Let me go to April 20th. First, I want to show you guys a little bit of cherry-picked examples so that all scenarios are explained. Okay. The April 20th. Okay. I'll tell you what trade I took today on this day, on April 28th. First things first, we will be seeing the directions. So I came to the charts on the New York time frame and I'm trying to see the chart. Okay, daily time frame. Now, what is the direction on daily? On daily, we see minor breaks. What is the direction? Tell me.
Bearish.
Bearish.
Daily is bearish. Okay, cool. Let me write it down. Daily is bearish. Then I went to the 4-hour time frame to see what the direction is. And what do you think the direction is? Bearish?
Bearish.
Sorry?
Bearish. Bearish.
Okay, bearish. So I have two time frames with me. Let me just see the 1-hour time frame just to know what it's doing. What do you think the 1 hour time frame is doing?
Bullish.
Bullish.
Are you sure?
It broke the.
To make things a little easier, sometimes you can switch to line chart. Do you see any other QM now?
No. There is.
Are you sure? You don't think this is a bearish QM?
Yeah, it is.
So this is something which will take practice. You cannot just see a big thing here and be like, okay, it's bullish. You have to see if there's a direction change inside. You cannot ignore any candle. You know, when you're looking at the chart, you guys are directly going and looking in the middle. That's not what you have to do. Start from the recent price action and go back. And it's okay. This takes time. When I was learning this, I remembered the directions part on the 1 hour time frame took me a while. So it's okay. Green candle went up, red candle came down, green candle wick went above this wick and then broke here. So what is this? This is bearish. So the direction is bearish. Is that clear?
Yes.
I mean, the directions are clear, but sometimes, now here candles again came to the recent high, right? Again, that last candle.
Yeah.
Yeah, in these scenarios, what we have to do? I mean, if the candle comes reverse to the
So this
previous
is the last
high.
resort. This is the last
Yes.
resort. Okay? This is the last resort, right?
Yeah.
So on the 1 hour, the time frame is bearish, but 1 hour is on last resort. But we also have 4 hour and daily with us. So I don't have to care much. Right?
And when is the exact entry in this 1 hour?
I'm coming. Entry will not be on 1 hour. Entry will be on 5 or 15.
Yeah.
Guys, please don't forget what we have learned so far. I told you execution is 5 or 15. Why are you asking where's entry on 1 hour? You have to pay attention. So let's see now. I'm gonna wait for the setup. So what happened? So first I come here. So let's first see today what happened in the market. So this is Asia. Asia ended here. Asia began here. It's been going here. Okay. This is the 1220 candle, which means today's skill zone has not been swept. Okay. Let's see today's London. This is today's London. Today's London. This also today's London. Let's wait and see. Okay. What did I say? 1 second. What did I say? Is today's London slow? Is today's London high strong or no? Where is the London high? London high is this. Is today's London high a strong high or no?
No.
No. Why? Because today's London high did not sweep any liquidity. It did not sweep kill zone. So today, rather than trusting New York kill zone high sweep, we want to wait for price to sweep the London session high before we take a trade. So we are waiting, we are waiting, we are waiting. Okay. Okay. We have a QM here. Now we have QM here. Everyone understood? We have a QM on the 5-minute time frame like this, right? And it's not a random QM. This QM swept the London highs. It's not a random QM. So now you know. And what are the targets below? You also have New York kill zone low over here. So I can directly enter from here, stop loss above the high, and I can take a 1, 2, 3. Yeah. Now let's see what happened. Look at that. Look at that. Do you see what happened? We got a 1, 2, 3. Why did I enter directly from here? Because it was just a 9 pip stop loss. So I was okay with it. As long as the stop loss is up to 10 pips, you should be okay with it. If it's more than 10, then in that case, instead of entering directly from here, I would have waited for a little bit of retracement. But do you see that? 1, 2, 3, I'm out. Do you see that price actually goes further down? How much was this actually? It was a 1 to 6 trade. I didn't take 1 to 6. I exited at 1 to 3. But just saying, where would be the perfect time for you to do break even in this? What would I do? I waited for the trade and I marked this. Why? Because this is the New York kill zone low. New York kill zone low is a liquidity. So if New York kill zone low is swept, I know that price can go up from there. The moment New York kill zone low is swept, I trailed my stop loss to break even because now price might reverse. You never know. And then I took my 1:3. When did you get your entry? You got your entry at 6:50 p.m. IST, target by 8:30 p.m. or 9:30 p.m. IST. Did you understand this trade?
Hello, Soumya. Yeah, actually, is it better to trial or SL or to keep TP?
If another pool of liquidity has been swept, then you have to trail your SL. By trailing your SL, I just mean setting it to break even. If another pool of liquidity has been swept, logically it can go up now. So you have to place your SL to break even.
Okay, no, actually, I'm not talking about break even. Like while going on our direction, is it better
No,
to
no, no, no. I don't do that.
TP?
I don't do that, but if you want, you can do that according to your risk management.
Yeah, okay.
Yeah, I don't do that because I tried to do that, but I do that on my futures accounts because I get to use the footprint charts in it. But on my Forex strategy, I don't do because also I just get like 1 to 2 to 3 setups in a week, not much.
Yeah, okay.
So
Actually,
did
I have
you?
seen your order flow video, like the recent trade breakdown. So I asked.
Yeah, in futures I trail because I have a valid reason there to trail. Because I can see the footprint charts and I can trail it, but I can't trail on candlestick charts because you never know where the price might just come. Imagine if I trail my stop loss here, price would have come, wigged me out, and then it would have gone down again.
Yeah, okay.
Soumya,
So,
I got a question.
yes.
Say, for instance, we're in the middle of a trade. We've entered a trade and our
Hmm.
trading window is over. So say it's 8:30 p.m., which is the
Hmm.
end of our trading window. Do we
Yeah.
exit the trade immediately or do we just set to break even and then let it play out?
Okay, so our trading window is basically our entry window. You are allowed to take trades until 8:30 p.m. Indian Standard Time. But if you are already in a trade, it's okay. You can let it play out because it's still just what 10 p.m., 10 a.m. in New York, so it's not really that late in the day, right? You can let your trades play out till if you're already in the trade. The point is you need to be in the trade by 8:30 p.m. If you do not get a trade till 8:30 p.m., you close your laptop. But if you're already in the trade, that's good. Hold your trade till 11:30 p.m. IST.
Got it.
Usually what happens is price will give you your SL or TP in 2 hours. It's not going to take that long, usually, if it's a good setup. But if not, you can keep the trade open till 11:30 p.m. Indian Standard Time. That's when you know you have to go to bed as well. You just close your trade because then overnight movements are just not predictable. Try to practice this. I've practiced this so much that usually when I try to hold the trade until it hits TP, if it does not hit TP by the evening, sorry, by 11:30 p.m. by night, then usually the next day in Asian session, if I leave the trade open, it hits my stop loss. So rather, whatever you have, even if you've made 1 to 2s or 1 to 1s, just book it and then go. Okay?
Yeah, Soumya, one more question. Like, if all the session highs are swept, like, can we target the trade to the previous day lows, previous day highs?
Yes, yes, of course. Always, yeah. Okay, guys, I have given you my entire strategy. This is the strategy which I use. If you guys are actually going to take this seriously, I will also post all the trades that I am taking with this strategy whenever I do on the group so you understand what trades I'm taking. So make sure that you've joined the Discord if you haven't yet, because now you have the logic. Now it's on you how you backtest it. You will have to backtest it. You will have to forward test this every single day, because only then you will be able to understand it better. Okay, so make sure to backtest this. Make sure to only test it on the pairs which I have told, and keep the group active. Keep asking doubts there. But before you ask doubts, guys, please, please, please rewatch this videos, because sometimes the doubts which you ask would have been clear if you would have just rewatched this video. The first time you watch something, it always is a little bit daunting. So just rewatch it again, and then ask me doubts, and ask on the group. I will, so that if other people also have questions, then their doubts will also be solved. And whenever I take a trade, I will also post it on the group so you are understanding when I'm taking trade. And this is how you'll be able to understand this. For a while, just trade it, and keep a separate funded account for this. Risk 1% on your funding pips account. I know all of you guys who are here probably must have risked um a percent. You guys have probably purchased a funding pips account, so you can just risk 1% on each trade and make 3% on each trade. So by doing that, you will be able to pass your funded accounts. Even I do that only on my accounts. So if you guys have any questions, please let me know.
Soumya, do you also have boot camp on the order flow?
For order flow, that is basically futures trading, and for that, I don't have a boot camp for it, but because it's much more extensive, and it's the thing is, it really requires hand holding, and for that, I do sessions thrice a week, Monday, Wednesday, Friday, from 6:15 a.m. to 7:45 a.m. IST. So that is a like proper mentorship until you get profitable, like a lifetime thing. So yeah, I don't have a boot camp for it, but yeah, we do have that. If someone's interested in that, you can just message me. We have had a couple of classes. I can send you guys the recordings. Again, it is for order flow only and for futures only. And for that, you need a software called Atis, which is also a little bit pricey. You can check that out. If anybody's interested to learn that, the timings I told you, I'll provide the recordings as well. But it's always the best to join the live classes. And the fees for that is a bit pricey again, because I'm giving my personal attention to you guys. It's a small group of people. So the fees for that is $500. I have a couple of students right now. If anybody is interested, then you can just PC about that. Anyway, guys, does anybody have any question?
No, and thanks for the session. It's really amazing, and I have cleared my doubts from previous book and in this session.
Yes, I'm glad.
Oh, yeah, sorry. I've just one quick question. If you could go through again the definition of a strong high and low, if that's okay.
Sure.
Thank you so much.
Is that clear?
Yeah. Okay. Okay. Got it. Thank you.
You're welcome. So, guys, is everything clear? I will again conduct a session maybe in like a month. So you might have already used the strategy and you might have some experience. Maybe that's when you can maybe that's when you will be able to ask me more questions because you need to backtest it by yourself too. Now I will randomly give away accounts to 5 of you guys. And let me just type it down. Hi, Soumya. Basically, I'm a beginner in this trading field and it is only 2 months. Can I get some advice or practice with confidence in trading? It was really informative. Can you help me with that? Also, are you providing mentorship for Forex? No, I'm not providing mentorship for Forex because everything that I want to tell you guys is in this video, in this session. But yes, I provide mentorship for futures. If you are interested in futures, you can join with that. And how to build confidence in the strategy, just backtest it, spend some time on the charts, spend some time on trading view, and just sit on trading view and just backtest it. That's the best thing you can do for yourself. And also see whenever I come live on YouTube, join that. And whenever I post trades on my Discord, just go and try to see why I took this trade and stuff like that. Do that. Check every single day, check the market. Ask me questions in the group. Ask me if I'll post trades, whatever posts I'm posting, keep checking it, keep the group active. Do not just give up on this. Just don't give up on this. That's one thing I'm saying. And one more thing is keep a separate account for this. I'm telling you to keep a separate account for this because that's when you will understand the proper win rate of the strategy. If you will mix it with other strategies, then you will not be able to understand it and you will stop losing faith in the strategy. And it will be a little bit difficult initially. It's going to take some time. You need to give it some time. You need to really practice. You need to risk less, risk only 1%, learn about lot size, learn about using the tools properly, and only then you will be able to um, take the trade. So, what I'm saying is, you need to be very disciplined with your accounts, and initially, you might be taking more losses than you would, but that's okay. Just give it some time and have some patience. And most importantly, keep a journal for yourself, whether you want to keep a physical journal or you want to keep a Notion journal. Just keep a good journal so you are able to take trades. Okay. So, yeah, that is one thing. Let me also decide the giveaway winners. One, two, three, four, five. Okay, I have 5 winners with me. I have put that in the chat box. Please don't be disappointed if you didn't get the giveaway this time. I will, if I could, I would have given each one of you a funded account, trust me. But sadly, that's not possible for me to do that. So yeah, I'm giving five K dollars funded accounts to these guys. It's in the chat box. Please remember your names And if you have not registered on Funding Pips yet, you have to register it. And you guys can WhatsApp me your Funding Pips registered email address, Funding Pips registered in email address, and give me a week for you to receive the accounts. And I hope that you guys use my strategy, and I hope that this boot camp really helped you. And trust me when I say that this bootcamp is going to change your life. Trust me, if you use the strategy, you will be able to take payouts. All those certificates you see there, funding pips, all those certificates are literally from this only strategy. I'm not gatekeeping anything. Trust me when I say it, people charge 3-4K dollars to just teach you the stuff which I taught you guys. All I wanted was for you to buy a Funny Pips account with my code. Of course, I'm getting like $2 referral fee when you use my code, obviously. But yeah, that's it. And that account is for you, which you purchase. I want you guys to take trades on that account for yourself. And trust me when I say that this is all you need to take trades on your Forex account. And if you understood this, then I mean, I'm really, it's nice that you all joined. Although giveaway winners, make sure that you email me your FunnyPips registered email ID today. And guys, keep the WhatsApp group active. Make sure that you've joined my Discord. I will also create a playbook soon. Give me some time, then I'll share it across maybe in a day or two. And whenever I send you guys any Forex related trades, I will also make trade recaps for it. Watch those. And with each passing day, with each trading day, your learning about this strategy will get better. So